There's an unprecedented amount of liquidity everywhere. A lot of it seems to be kind of on the sidelines.
The consumer is still seeing a strong economy. They just are a little bit less excited to participate in it.
It's likely we return back to the growth levels that we saw at the end of 2019, early 2020. So prior to the pandemic.
It's not so much about the inflation, in my view. It's about what the Fed is going to do about it.
There's definitely signs that they need to be tapering and they need to get out of this QE business.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene, a simulcast, a Friday simulcast. Thrilled that you're with us on radio, on television. Jonathan Ferro on extended sabbatical now in Crete. We're thrilled that he's in Crete. I haven't heard yet, Lisa, if he's landed in Crete. Kailey, Leinz helping out this morning. Futures in negative 17, Dow futures negative 129. And for those on radio, you are advantage. Because one of these blues doesn't look like the other blues.
Tom, you can't criticize us right off the bat for what we're wearing.
I'm in blue. Kaylee's in blue. Lisa's in blue. It's a blue Friday, folks. We'll leave it there and move on. I mean, it's...
Take it up with wardrobe, Tom.
Looks like the San Jose Sharks on a bad day. Anyways, here we are. Lisa, it's been an extraordinary week. Lisa, to me, it's been a week of 4 Fridays. That's how long this week has been.
I know. Maybe that says more about how we're doing at this point in the summer, although I think a lot of people are feeling the same. Is it over yet? The pandemic sort of coming back, and I think that the psychological hit, in addition to some of the pressures on the travel and leisure sector, and frankly on the commodity sector, sending a new tone into this market, Tom. I think that is really the way that I take away from this week of Fridays.
Off the gloom yesterday, we were doing the gloom show yesterday.
Yeah,
the market's catching a bid and really some real sustained level here, Lisa. It was buying the dip yesterday, wasn't it?
If you look under the surface, though, yes, it was. If you look under the surface, it's been fascinating. There have been shares that have absolutely gotten crushed, including Amazon, which is interesting. And then you have other shares that have really held in nicely and have done, back to this sort of stay-at-home kind of economy and big tech dominance. It really raises a question, Tom. Are we seeing a correction just in such a nuanced way and sector by sector that we don't even notice?
And yet an extraordinary story in Kabul and also in Washington as well, and with the allies and Kailey, Leinz. I mean, we're all watching tick by tick what we see with this horrific ongoing story.
Yeah, we of course are, Tom. I'm not sure that the market, frankly, gives much credence to what is happening in Afghanistan. As far as geopolitical risk, that doesn't seem to be one of the primary concerns that is dragging on sentiment. That seems much more to be about the Delta variant, about the possibility of a Fed taper coming in the next 3 months of the year. And then, of course, you also have China, and perhaps that is idiosyncratic, Tom, in terms of the kind of technology crackdown taking shape there. But the growth story feeds into a lot of the concerns throughout the rest of the world.
And the growth story, again, off China, John Ferro, I thought was really good about focusing on that story. Can China generate 6% GDP? Futures negative 18, Dow futures negative 143. The VIX is of important note. The VIX out to a 23.07. In the bond space, as they say, and this is critical, on the board, 123.16 is a lower yield in by a full basis point, and that's a grinding oomph down, and you see it in curve flattening to a solid 101 basis points. Move the decimal point 2 places, 1.01 percentage points between the 10-year and the 2-year. Oil, southish again. I mean, what do I do with oil, Lisa? Tell me what to do with oil.
Stockpile it in your living room, clearly. I mean, that was clearly a winning trade for me. I will say that there is a new tone to markets, as we were talking about earlier. And I would argue that perhaps the bond market has been out front, people saying that it's the Fed, John actually raising the issue that don't blame the Fed, because in this case, probably the Delta variant and some of the supply chain disruptions having more to do with the sort of bearishness that we're seeing come into particularly the bond market, but also the commodity space. Let's just get you through what we're looking at today. It is a snoozy Friday. If you want to go ahead and leave early to go on vacation, I won't tell you.
I'm on that. Okay, thank you.
11 a.m. The Dallas Fed President Robert Kaplan is ready to speak. He has taken a more hawkish tone, if that exists, on the Federal Reserve in terms of when to taper assets. To me, I'm going to be very interested to see what Fed Chair Powell says next week regarding the inflationary pressures from supply chain disruptions paired with a slowdown. How does the Fed deal with this when some people are saying that these inflationary pressures are more than just transitory and have some sort of longer lasting impulse, especially as these supply chain disruptions last for longer? Today, you were speaking, Tom, about the Afghanistan situation. German Chancellor Angela Merkel is meeting with Russian President Vladimir Putin today. Among the discussions as Angela Merkel wraps up her tenure as Chancellor of Germany will be Afghanistan. Russia is one of the only countries to maintain its embassy in Kabul. Question is how much they will try to position and use that to their tactical advantage. They typically have had an okay relationship. What will she sort of direct him or say, and how will she frame it after the conference? And at 1 p.m., Baker Hughes U.S. rig count. I'm interested to see.
I love this. Why do you like this? Explain to our audience on radio and TV the so what of the Baker Hughes rig count.
One of the interesting things, and actually if you extend this chart out a lot earlier, you could see that the number of rigs that were in operation in the U.S. plunged in the direct aftermath of the pandemic. They have come up, but they have not recovered. They have come up very slowly. We have seen discipline in the shale patch, which raises a question of whether we've seen peak shale, Tom.
Let's get right to it, and we are thrilled to start strong on Friday with Dennis Gartman. He's the retired editor of the Gartman newsletter, still writing the Gartman newsletter, and it is a jewel today in his retirement, which harkens back to Saigon. That cartoon, Dennis Gartman, in your morning letter is painful.
It is very painful. The relationship or the similarities between what happened in 1975 in Saigon and what is happening now in Afghanistan are frightening for those of us who were around back in the 1970s and remember how that looked. It is dismaying to see the United States position in the world having been diminished as badly as it has been. This is a very disturbing circumstance that's prevailed, and this is a long, long week, and we have a long time ahead of us to worry about the loss of perspective here in the United States.
Dennis, Lisa wants to jump in, but I've got your newsletter is a jewel on how prices are priced at the margin. Almost there's a marginal pricing of the margin at the margin. Explain that.
Well, first of all, in all markets, I've always maintained that price is made at the margin. When the last 2% of buyers become sellers, prices go down. When the last 2% of sellers become buyers, prices tend to go up. Price is made at the margin. And what bothered me this time was looking at the level of margin being used in the stock markets that these days had been going up for 15 consecutive months, coextensive with a bull market in stock prices. But there's always been a very leading indicator that the use of margin has led the market to the downside, has led the market to the upside. And now for the first time in 15 months in July, the use of margin, and I've maintained that that's where wizened, sophisticated, smart money has been leaving the market since July. It's very disconcerting. That tends to lead the stock market higher or lower by several months, 2 or 3 or 4 months, sometimes a bit longer. But when you start to see margin usage declining, you have to be careful about the stock market itself. It is one of the better leading stock market indicators that I have learned to watch over the course of my nearly 50 years of being in the markets.
Dennis, what does this mean in terms of some sort of drawdown, considering that a drawdown these days is perhaps maybe a 0.5 percentage point decline?
Well, I think there's more going on here than a 0.5 point decline. Take a look at the broader market. We tend to pay too much attention to the Dow, too much attention to the S&P, way too much attention to the NASDAQ, and nobody's paying attention to the broad Russell index, which has not made a new high now in several months, has broken its upward sloping trend line several weeks ago that goes back into March of last year. Something is happening in the broad market that doesn't seem to be taking place publicly. The public is still involved in the markets. It still sees the Dow making new highs. It still sees the S&P and the NASDAQ making new highs. And you brought up the fact that you have to pay attention to what happened in Amazon. Amazon, for the technicians, gapped lower dramatically almost 10 days ago and has not come close to bouncing since then at all. And Amazon had been one of the leaders to the upside. When the generals get taken out and get shot, you have to be worried about what the sergeants and corporals and privates are going to be doing.
Yeah, and I look at things like the AAII sentiment survey that we got this week, the bears out exceeding the bulls for the first time this year. Have we started to see a real shift in sentiment this week?
I think you have. I think that's starting to take place. I think there's no question about it. People talking about the inevitable tapering of the Fed's expansionary policies. That's going to happen, whether it happens in October, November, December, January. Certainly that's going to happen. And I've maintained all along that the great bull market that we've gone through has been almost solely predicated upon the expansionary policies, not just by the Fed, but by the Bank of Canada, the Bank of England, the ECB, the Bank of Japan. And the Fed is clearly, at some time in the next month, 2 months, 3 months, 4 months, going to start the process of tapering. Whenever that happens, that's less money coming into the market. and money will leave the stock market and go into the expanding economic circumstances. Clearly, the economy is doing well, and that's what happens at turning points. Stocks go up before the economy turns higher. Stocks go down before the economy turns lower. Stocks are going to start moving lower, and the economy will continue to not boom, but be really quite expansive, quite strong.
Dennis Gartman, thank you so much. Too short a visit this morning to get us started on this Friday. Chairman of the University of Akron's Endowment Fund. John Deere out with earnings. Deere is followed because it's John Deere. Deere's also followed because in the aged days, it was part of the CFA curricula. So everybody in the racket follows it with great sentiment as well. Lisa, the sentiment here is optimistic. They've got robust conditions out there.
Yeah, well, right now what you're seeing, and this goes into the food inflation story that we've been talking about, that you have seen certain disruptions and the demand increase, and so the prices increase. People need to plant more, and you get the equipment, particularly for farming, which Deere specializes in. It just highlights, though, to me, how markets respond to upward revisions, to upward forecasts, because you can see the shares actually are lower in pre-market trading time.
And Kailey, you won't understand this being an urban girl, but a girl out in Fargo, North Dakota, I mean, the idea here is you've got to upgrade to the next John Deere tractor, right, Lisa?
Well, yeah. For the record, Tom, I may be a New York City girl now, but I'm a Virginia girl at heart, okay? So just putting
Lisa,
that out there.
the pressure, Lisa, to get the marginal tractors there.
Yeah. Yes. Go ahead, Kailey. Reprise your power here.
Speaking of pressures, I'm just taking a look at Deere's release, and they say they had strong results even while enduring significant supply chain pressure. So they're able to withstand it for now. The question is, if those pressures continue, what happens then, Tom?
Yeah,
Lisa, how in God's name did she get on this show? She actually read the press release?
She put blue on, and she came on set, because that is what we do here at Bloomberg
Futures
Surveillance.
at -19. Good morning.
With the First Word News, I'm Laura Wright. In Afghanistan, more scenes of chaos at Kabul airport. The U.S. is rushing to evacuate people, but Taliban forces at checkpoints around the airport are making it tough for people to enter. That's raising concerns that citizens will be prevented from leaving. Meanwhile, the White House says the U.S. evacuated almost 3,000 people yesterday. In Australia, Sydney's 2-month-long lockdown will be extended until at least the end of September. The coronavirus's Delta variant outbreak has gotten worse in the country's biggest city. Meanwhile, New Zealand has linked Sydney's outbreak to at least 3 local cases. So the country's 3-day lockdown that was due to end today has been extended until at least Tuesday. Coronavirus patients are dying at U.S. hospitals at rates not seen since February. Those numbers could get worse as intensive care units overflow in parts of the South. The number of people dying with confirmed or suspected COVID rose to a 7-day average of 1,016 on Wednesday. It will be the Biden administration's most high-profile trip to Asia yet. Vice President Kamala Harris will look to bolster economic and military cooperation in China's backyard. She'll visit Singapore and Vietnam starting this weekend. Leaders there will look to Harris to reassure them of America's role as a major trading partner. Meanwhile, Harris will be able to raise her international profile. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
The U.S. military footprint in Kabul is now more than 5,200 total troops on the ground. Kabul airport remains secure and open for flight operations. Since the start of evacuation operations on August 14th, we have airlifted approximately 7,000 total evacuees.
The general from Brigham Young University, General Taylor, is a different general with massive on-the-ground experience in Afghanistan. He was the guy at West Point who taught you jujitsu and these other physiology things, you know, wrestling on the floors of the mats at West Point. He is a distinguished member of our military. Just as distinguished, Anne-Marie Horton joins us now with Bloomberg in Washington. Anne-Marie, how's the Pentagon doing this morning?
Well, they're getting a lot of questions, Tom. I think the Pentagon is just trying to work through the process of, they said that there's going to be 6,000 troops on the ground. You heard from Admiral Kirby there that it's actually 5,200, so still more troops coming in. But they are getting people out, not at the maximum level, though, that they are capable of. So they are trying to reach up to that level. I think the other problem that they're dealing with, and this is actually more of the State Department, and Representative Seth Moulton really laid into the administration on this, is actually less so the military, but those diplomats that need to be on the ground to make sure that they can go through people's paperwork before they actually get on the flights.
So where are we in terms of the paperwork? I know that was part of the issue, that they said that they couldn't bring people over because they were processing paperwork. What's the kink in the system now?
Well, from what Representative Moulton says is that they wanted to double it. They had 20 people on the ground. He says that now they are doubling that. So he says that would make it, 40? But he is calling it, let's mind you, this is an individual who is a Democrat. He also is a former Marine serving tours in Iraq. He says that this is one of the greatest foreign policy errors. We will get an update today, though. The President of the United States will be briefing the American people. Know that. Yeah. Yes, the President of the United States is going to be giving a speech in the East Room alongside Vice President Kamala Harris before she jets off to Asia about Afghanistan. So we will know where we are from the President of the United States, because the situation on the ground is incredibly fluid. If you look at the reports, and you can see there the video coming from Kabul.
Yeah, although, Anne-Marie, his tone has been pretty consistent. I mean, we've heard from him several times already in both the ABC interview as well as in his press conference on Monday, and his tone is defiant, saying that we did it the best that we could. We had to get out of there. We withdrew under the parameters that we understood. What more could he potentially say today when he gives a new address?
We have to wait and see. We know that the president will at least update the American people on their assessment of how many Americans they have gotten out, as well as many of those SIV Afghan applicants, those special immigration visas, and also what comes next. I think the deadline is something to really consider. The August 31st deadline is important because that is what the United States has negotiated with the Taliban. You have the U.S. having security control of the actual capital, but you have security checkpoints of the Taliban set up around the capital, around the airport, excuse me. So what happens on August 31st if they do not have their evacuation program underway and completed? This is where things can get potentially precarious and risky, as Jake Sullivan, the National Security Advisor, had said to NBC.
Is this solely for the executive branch of government to deal with, Anne-Marie? I know that some House members are going to get a declassified briefing an unclassified briefing on Afghanistan today. They are, of course, coming back next week to deal with the reconciliation vote. Are we going to see any action from Congress on Afghanistan?
Well, the Congress right now just wants answers. You see immense pressure, bipartisan pressure on this administration for answers on how we got to this place in this evacuation withdrawal. There's going to be a declassified briefing on Monday with House ranking members, and then on Friday with all House members on exactly what went on in Afghanistan. So there is a lot of pressure on this administration to have answers, and really as well from the State Department. The Wall Street Journal reporting that there was a cable sent July 13th talking about the deterioration of what is going on in Kabul, and this is what Congress wants answers on.
Anne-Marie, an unfair question, but I'm going to go with it anyways. In all your reading and context, do we have a clue what's going on in Herat, Kandahar, or up to the north?
Well, what we do know, Tom, is that there's not a U.S. presence there, right? And the Taliban has control. So you have a lot of individuals who are feeling that they're a bit left-footed, back-footed on this situation, and many people in hiding. It's very difficult for these people to get out of the country because Herat, for instance, is very close, say, to Iran or Turkmenistan. It would be incredibly difficult for those individuals that want to get out to make their way to Kabul. But you can't get out through Iran right now, and you can't get out through Turkmenistan right now because these borders are locked by the Taliban.
An interesting day, Anne-Marie, with a long, long Friday ahead of her as the president will, I believe, address the nation. Anne-Marie Horton, thank you so much. Back to the markets, guys. And Lisa, I think you've emphasized it twice here this morning about commodities link in. You wonder, Ed Morris looks smart at Citigroup, does he, on calling for lower oil prices?
Yeah, and if we remember back a couple of months, people were calling for perhaps $100 a barrel of oil, and how much that picture has changed. And we've been talking about how this really has come on the demand side, not the supply side. The idea that this Delta variant has changed the dynamic, and whether it's just a pause or whether it's a shift in the trajectory of the recovery remains to be seen.
Kailey, Lisa and I darkened the door about 5:52 a.m. You get in a little earlier. What do you observe on the Bloomberg terminal in the markets?
Well, it's interesting. The handover has been so negative from Asia, Tom. It was true yesterday, and stocks in the U.S. were able to withstand it. And once again, I'm seeing a similar pattern when I walk in the door at 2:45 a.m. Eastern time, that futures are lower with it deeply red in Asia. And futures were futures were also lower yesterday, and then we ended the day positive. So it'll be interesting to see if that buy the dip mentality once again comes in, or if whatever risks are weighing on sentiment in Asia trickle through here to the U.S.
The trading crew is talking about gamma and options and the rest of it. I'm just talking about a VIX 23.13 as well. Lisa, we have to announce again, as we did lightly yesterday, 1 week from today, folks, Lisa Abramowicz and I will come from the shores of Jackson Hole with Michael McKee.
Really?
And the chairman will be virtual.
It's land. Yeah. Well, this is going to be, I'm just still trying to get my head around the geography that you imagine we're heading to in the mountains of the ocean there in the Grand Tetons.
There's a big swamp, seriously, off the deck. When the central bank elite go out and wave to the elk and do all that, Lisa, it's a huge swamp over a good mile and a half with all sorts of animals like in there. There's trout that Ken Pruitt used to fly fish out there. The late Ken Pruitt.
Exclusive. You look out there and you see all the animals. One person who will be disappointing the moose and the elk will be Jay Powell, as you said, because he's going to be staying in Washington, D.C. Others as well, including Vince Reinhart, who's coming up, the economist from BNY Mellon. He also is going to forego a visit because of the Delta variant, which just highlights kind of where we are in this pandemic. But we'll be there and we'll be waving to the elk. Maybe nobody else.
A different conference. Michael McKee lining up important conversations with sundry Federal Reserve officials, but it's going to be good to talk to Vince Reinhart here in a moment. On bonds, on the lack of coupon, Margaret Patel of Wells Fargo will join us here in a moment. Please stay with us on radio and television. This is Bloomberg, the VIX 23.03. Good morning, everyone. Bloomberg Surveillance on radio, on television. It's a Friday, getting you ready for weekend reading. Everybody, of course, reading on Afghanistan, reading up on the Taliban, but reading on these markets as well. Lisa Abramowicz and Tom Keene. Kailey Leinz in for John Farrow today. Mr. Farrow begins a well-deserved sabbatical on Crete. Right now, let's get right to it. Margaret Patel with us with Wells Fargo Asset Management. She's a senior portfolio manager, which barely describes the experience she has in the ups and downs of the market. Margie, I'm not going to mince words. It's one of the most optimistic notes on this economy and on the need to participate in markets I've seen in weeks. Describe your optimism.
Well, my optimism is really based on the way the Fed operates nowadays. The Fed used to be cyclical. They slammed on the brakes, slowed the economy, then flood the system with cash. The economy would go. And now they're really on this secular easing. No sign at all that we can see that there'll be any tightening on the horizon foreseeable future. And so that says to me we're not going to have what we think of as a normal cycle. We're just going to see a steady growth in the economy. Maybe a little slower from this big COVID bounce back, but good enough to make it a good market for equity investors.
The conundrum in the decades of your success is parsing yield versus dividend growth. Which has the high ground right now?
Well, you definitely have to look at equities for all the uncertainties, simply because on a yield basis, they really are very competitive. Certainly with investment-grade bonds, the average yield of the S&P, for example, is about equal to a 5-year investment-grade corporate bond. That doesn't make any sense if we have any sort of growth.
All right. Well, you said that earlier in an appearance that the Fed has effectively crushed the credit cycle, or at least flattened it with respect to the potential defaults that we'll see. I'm wondering, at a time when you see, for example, spreads in high-yield bonds, the extra yield that investors ask to earn in order to hold these debt over benchmark rates, when you see it climb to the highest level since March of this year, as we're at right now, does that give you a buy signal based on the fact that the Fed has this market's back, or is it a cautionary signal that perhaps there's more to come?
No, I think that spread really reflects what's going on in the ups and downs of the Treasury market rather than high yield. There's very strong demand for high yield still, and there should be, because you get 3 percentage points more yield, and defaults, excluding energy, is only about 1%. So there's very little not to like in the high yield market, except for the low yields, of course.
Right. Well, there's also an issue here where how do you provide fundamental research, and how do you look at specific names at a time when there is such central bank support for the entire market?
Well, I think that market supports the price earnings ratios. I think that makes basically yield securities bonds rather uncompetitive. And I think actually in the Treasury market there's a scarcity of issues to buy because the Fed has bought up all the free bonds, about a third of the bonds. And so I think when you look at companies, you have to say who can grow faster than what we think will be pretty modest, 2 or 3% for the next couple of years, and look at those companies that have sustainable earnings growth.
Does that have to mean tech, Margie?
Yes, I think tech has a lot of opportunities. It's still a long-term, high-growing sector. And of course, you need to be choosy here because we've had PEs of many companies be really blown out because people are very optimistic. But I think as we go into the second half of the year, we're going to see more of a convergence on growth from different sectors. And so we may see the air come out of some of those very high levels and other sectors do a little better.
So do you think that we've already seen peak cyclical trade?
Yes, I do. I think what we're going to see now is, again, I'm looking more for secular growth with less cyclicality than we've ever seen for forever in our careers, because of the Fed action, which is really muting any kind of volatility, which they've always caused.
I mean, this is really an important conversation, Margie. I mean, the optimism you've got has been rare this week. It's been a really strange week. And what it comes down to is you're stretching your x-axis out and out and out. Pushing against you are economists lowering their GDP view. Explain those. You're optimistic out, and they're coming down, down.
Well, that may be true, and I think it's partly because we all kind of think we still live in a cyclical world. But if you don't expect rates on treasuries to go up,
right,
it's very hard to expect a change in price earnings ratios.
Lisa, I think this is incredibly important and speaks to the bracketed 10-year, which hasn't gone to a Steve Major level. I mean, that's the news of the week. The 10-year's a 123.
That's an amazing factoid and actually true. The fact that the Treasury yield hasn't gone down more in the face of some of the declines that we've seen, particularly in the commodity sector.
And that gives Margaret Patel optimism.
It's fascinating. Well, you have to wonder, what are people seeing that provides the counterpoint to this other downward pressure on global growth, which we've seen, decade after decade? And that really raises an issue, Margie. I mean, is there a sort of potential here for Treasury yields to rise, or are we going to remain in this Goldilocks scenario because of the Fed? As you said, they typically create the volatility. At this particular situation, they're not. They're committed to holding policy as easy as possible through the cycle. Does that mean we are going to stay in this range for Treasury yields? Is that a base assumption for your bullishness?
Yes, and I felt that way actually for years. The Fed's dual mandate, full employment and inflation around 2%, to me are you can't reconcile the two. And so therefore, how can they begin to tighten when we have, 9 million people unemployed? So they'll never get to the 3% unemployment rate, so therefore I can't see them ever tightening.
I mean, Kailey, it's amazing how this destroys the taper worry. I mean, everybody's lathered up on taper.
Are they, though, Tom? Yesterday, I asked this question to our Eddie Vanderbilt over on the M Live blog. Why was anybody surprised? Have we not been having this conversation about a taper coming in the next 3.5 months or so of the year, that it was all too likely that the Fed was going to announce those plans, and yet it seemed to take the market by surprise? And yet I'm not really sure what exactly has changed. I mean, Margie, do you think anything has changed in terms of the taper conversation?
No, it ebbs and flows with market fears. But I think that I don't expect the Fed to taper this year that many people are thinking. And B, even if they do, I don't think that would be bad for the market. They're still going to keep rates very low. And there's actually a scarcity of long duration Treasury securities for the rest of investors to buy. So the market could actually respond very positively if they say we're going to cut down on our purchases. I don't think it'd be a bad thing at all for the market.
Would it be a bad thing for the market, though, if the Fed ultimately acts too late?
Well, in order to act too late, you'd have to see sustained higher inflation. I think we've already seen signs inflation is tapering down, and we're not seeing a burst of demand in borrowing from business or consumers. So it's pretty hard to see any change from what we have. And so it looks like the Fed may be right on saying they expect inflation to trend down.
Margaret, you and I have been doing this for years, and one of the mysteries I have is the elitism of the cash build out in Silicon Valley. Should the tech companies, the big fangs, do they need to dive into the Patel all-dividend pool?
Well, it depends in those cases what their return they're expecting from their own stock versus buying other stocks. But I think it's very common, as you're pointing out, to see companies are awash with cash. They have more cash now than they've probably ever had across the board. And I think they're all still holding it for a rainy day. And so that's good for business. They have the cash reserves if we saw an unexpected slowdown in the economy.
Margaret Patel, thanks for the brief this morning with Wells Fargo Asset Management. Of course, is parsing folks between portfolios of dividend and coupon. It is a battle right now, to say the least. Lisa, I recall the day where one William Gross said to me that he preferred Procter & Gamble dividends over a yield, and basically the Bloomberg and finance world stopped.
Well, you're starting to hear this more and more, and certainly over the years, people have actually owned equities instead of bonds because you earn more from them, and this has been a story for a long time. I do wonder at this point where we are in the economic recovery, how much further we can go, and I think a lot of people are saying if you look at the earnings, it's tremendous. If you look at the cash, where is it going to go but to buy back stock and give more dividends? And I think that that has been one of the most supportive stories for equities this year.
I should eyeball it that Bill Gross, when he told me that, Procter & Gamble's up a solid 10% per year, which is a little better than clipping a coupon. Kailey, what's your observation off the conversation with Ms. Patel?
Well, it's interesting. And to the conversation you and Lisa were just having too, Tom, I would point everybody to John Author's column out on the Bloomberg today. He talks about, Tina, the idea that there is no alternative, or there really is no alternative at all because yields are still so low. It's forcing investors into equities. And he pointed to that Bank of America fund manager survey that came out earlier this week, where growth expectations have come down remarkably so to the lowest levels in months, and yet equity exposure really hasn't changed. So no matter what is happening to people's growth expectations, they're staying in stocks because where else would you go?
Can I point out one other aspect of this? There was a story yesterday, didn't get a lot of attention. The largest U.S. public pensions were concentrating all of their bets in specific stocks, that almost 15% of their stocks comprise about more than half of the total value of pensions equities portfolios. This includes Microsoft, Amazon, Facebook, Alphabet. At what point does a rout in the likes of Amazon end up becoming a systemic risk? And we really have to start asking that as you see this types of concentration increase not only in pensions, but frankly in hedge funds, because they have been the safe bet. You just wonder how much more fragile it makes things for down the line. I'm not saying there's a sell-off. I'm just sort of, looking at the potential risks building.
Yeah, I can go there. But, the other thing that didn't get a lot of attention yesterday was the Dutta-Lisa conversation.
Oh, right.
Legendary.
It didn't get any attention as well. How did the PR firm you're dealing with, Lisa, did they handle that okay?
Yeah, they massaged.
They managed the message.
Conversation. Honestly, I think that becoming a contrarian questioner becomes a perilous event in an era of continual gains. And I will say, I will continue to try to look around corners.
This is what happens, folks, when Chicago philosophy shows up at the door. We will continue.
It wears
Kailey
teal.
Leinz in for John Farrow, Abramowicz, and myself. On the pandemic, we look at that next. Stay with us.
With the First Word News, I'm Laura Wright. The biggest tax hike on wealthy Americans since 1993 is bogged down in Congress. The tax writing committees in the House and Senate are almost certain to miss their September 15th deadline for coming up with details. The problem is that lawmakers don't know how big President Biden's spending package will be. Plus, lawmakers have different ideas about which tax measures to enact. In Afghanistan, more scenes of chaos at Kabul airport. The US is rushing to evacuate people, but Taliban forces at checkpoints around the airport are making it tough for people to enter. That's raising concerns that citizens will be prevented from leaving. Meanwhile, the White House says the US evacuated almost 3,000 people yesterday. A defeat in court for the Biden administration on immigration. A federal appeals court has told the government to reinstate the Trump-era policy requiring asylum seekers at the southern border to wait in Mexico while their cases are being processed. The Biden administration had allowed asylum seekers to wait in the U.S. The case is likely to end up at the Supreme Court. The private equity firm CD&R has raised its offer for the fourth largest grocer in the UK, Morrison. The firm's now offering $9.5 billion. That gives it the upper hand over the other suitor, Fortress Group. Directors at Morrison have unanimously withdrawn their support for Fortress bids and are now backing the new offer. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
The U.S. has to be taking the lead. I'm pleased to see that the U.S. already has it. The U.S. has distributed 100 million doses overseas that the American taxpayer has done gracefully, graciously. They're in people's arms. That's more than every other country combined. But still, I think we'd all look at ourselves and say, we got to do more. We got to do much more.
Andrew Slavitt, of course, formerly with the Biden White House as a senior advisor. He is a Democrat I would suggest that Republicans listen to. Enough medical prestige there to make people lean forward in the midst of this horrific pandemic. John Farrow on sabbatical, Kailey, Leinz, Lisa Abramowicz, and Tom Keene to get your Friday started to line up the reading for the week. Andrew Peckosh with us now, the Johns Hopkins Bloomberg School of Public Health. I should point out that Mr. Bloomberg of this television and radio shop, it is his philanthropy at Johns Hopkins. Dr. Peckosh, I notice that at the CDC, into my youth and those younger than me, is the normal operation of measles, mumps, and rubella, 14 months old, and you get a booster shot when you're 5 years old, and it's no big deal. Why is a booster shot with COVID a big deal?
Well, right now, we're dealing with massive surges of cases. With in the example you mentioned with measles virus, case numbers are normally quite low, so vaccination rates that give you moderate immunity initially are enough to keep the virus down. You then boost that immunity a few years later to get up to a really good protective level that lasts for most of your lifetime with measles. SARS-CoV-2 is showing the ability to change a little bit, probably not as much as we see with influenza, but it's showing some ability to change. And we also haven't gotten anywhere close to the level of immunity in the population to keep the case numbers down. So we're still working out how we're going to approach a long-term COVID-19 vaccine policy, but I think everybody believes that we are going to be dealing with COVID-19 for the long term.
Is your perspective, and I'm looking at the Miami Herald this morning, where the lads and the lovelies of Cypress Bay High School in Weston have their masks on. The kids have their masks on in Florida. That's got to be a good sign, right?
Absolutely. I think that, again, given the large number of cases, particularly in certain parts of the country, you want to rely on more than just vaccination status to be able to protect you from infection. So for the short term, at least, this is where masking combined with vaccination, combined with some level of social distancing, is going to be essential until we get this latest surge under control. And at that point in time, we may be able to talk about loosening some restrictions. But right now, we need to get this thing under control.
All right, given the Delta variant and given what you're talking about here, that we're going to be with COVID for a long time, or it will be with us, what's going to be the new normal after the pandemic? Will we wear masks more? Will we try to socially distance more frequently?
You know, I think once we get a significant portion of the global population immunized against COVID-19, we're going to be seeing this virus sort of move into something similar to what we see with flu. In the winter months, we'll see surges, but those surges will be controlled because of the immunity in the population and the better treatments that are coming down the pipeline. Right now, the SARS-CoV-2 doesn't look like it changes as frequently as influenza does. So my guess is that we won't need to pay as particular attention to matching vaccines to circulating strains like we do with influenza. But again, bottom line right now becomes we've got the tools to get it under control. We need more vaccinations to get ourselves to a situation where we can return to normal.
Yeah, Dr. Pekaj, based on what we're seeing in the United Kingdom, which has seen the wave come down after a real big peak, and given what we're seeing in terms of the trajectories of hospitalizations that have reached record paces in certain places, where do you think we're going in terms of the time frame? How long will it take before we're done and we can return to sort of loosening up some of these restrictions?
So, really difficult to predict that time frame. The other variable that's really coming into play right now is that in the fall, we'll be going to conditions where virus spread should be a little bit easier, meaning that we'll be going back inside, kids will be going back to school. That will change the dynamic of how this infection spreads. So, I'm hopeful that within 3 or 4 weeks we can get this under control and back to some sort of level of that'll allow us to return to normalcy. But the fall and coming back indoors is the big variable that is very difficult to predict right now.
And obviously what the administration has outlined is that booster shots will start to roll out in the fall beginning on September 20th. But how much does it really solve the problem if you're just giving another shot to people who already went out and got their shots, and yet you still have a wide swath of the population that isn't vaccinated?
You hit on the most important problem that I find with some of the booster policy that's being rolled out right now. Boosters are going to help us prevent severe disease, no doubt about that. So we should keep an eye on the elderly populations and others that are susceptible to very severe COVID. But boosters aren't going to help us get this pandemic under control. That gets back to the goal that we've had for the past 8 to 9 months that the vaccine has been rolled out. We've got to get more people immunized because that's what's going to control the infection, control the case numbers, limit virus spread. And we have to apply that not only here in the U.S., but globally to make sure that we're getting protection from new variants.
Andrew Pekos, thank you so much. Greatly appreciate it this morning with Johns Hopkins Bloomberg School of Public Health virologist there.
Tom,
Lisa?
Can I just weigh in on what he was saying? And I think, Kailey, it was really important that you asked this question about the booster shot and the importance of emphasizing that over just getting more people vaccinated. What do you do if you have a stockpile of vaccines and a whole host of people who don't want to take them, and you don't have the distribution mechanisms in a lot of countries? That's been one of the big obstacles to getting vaccines to other countries. What do you do with that stockpile if the science is indicating that perhaps there's additional protection for the people who are willing to take the vaccines? It's a peripheral measure, yes, but this is the issue. It is a social issue in terms of the people who are willing and the people who are unwilling right now to get the shot. I mean, Kailey, that seems to be the dynamic being set up.
Yeah, it is, Lisa. And to me, this raises a question, and it was kind of to your point, how do we ever break out of this cycle? Because as long as you're going to have unvaccinated people, and I would imagine that some of them maybe are on the fence, a full FDA approval might make a difference to them, but some of them are just never going to get the shot, right? They've decided against it. Yeah. And as long as everybody else is acting to protect those people, how do you ever put an end to some of these mitigation restrictive measures as long as that remains the case, Tom? It seems like it's just going to keep going and never stop.
Let's stagger to the markets right now as we set up here for another hour of surveillance. Vincent Reinhart with us. We'll talk about that in a moment. Futures are negative 18, but as Kailey Leinz mentioned earlier, there's a gentleness to us. I don't want to oversell that 23.07. Lisa, I do make note of the 2's10, the vanilla spread at 101 basis points. That deserves some scrutiny this morning.
Yeah, especially after financials have been one of the biggest overweights, and we know what happens when that yield curve flattens. Financials usually take that on the chin, Tom.
There's other things taking on the chin. You mentioned Amazon earlier. Dollar strength, DXY, stunning, not to a 94 level, but we're getting there 93.61. And of course, the big number there is the euro through 117, a weaker euro, 116.80, back to where it was 10 or 20. Or is it 30 years ago? That's impossible. 30 years ago.
We'll do some research in the break on teal.
I noticed how Kailey Leinz looked at me when Dr. Pekos was talking about the elderly and the booster shot.
I don't know what
I'll be getting my booster shot in the break. Vincent Reinhart, conversation of a day on economics. Next.
There's an unprecedented amount of liquidity everywhere. A lot of it seems to be kind of on the sidelines.
The consumer is still seeing a strong economy. They just are a little bit less excited to participate in it.
It's likely we return back to the growth levels that we saw at the end of 2019, early 2020. So prior to the pandemic.
It's not so much about the inflation, in my view. It's about what the Fed is going to do about it.
There's definitely signs that they need to be tapering and they need to get out of this QE business.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television on a Friday. A really interesting week. It's been, to me, a series of 3 or 4 Fridays in a row, an exhausting week. Kailey Leinz in for John Ferro as he begins a well-deserved sabbatical. I think he's on Crete or something like that. He's doing research on Crete, Lisa, as well. And, that speaks to the internationalist of the moment, Lisa, whether it's Afghanistan or the markets, it's an international Friday.
Or whether it has to do with the pandemic and how international the pandemic is, not only with respect to health, but also with respect to supply chains. The tone has shifted this week, Tom. It has to do with the supply chain disruptions that we're seeing out of China, with the Ningbo port continuing to be closed, or at least partially closed, due to one diagnosis, at least these are the reports, of COVID among the workers there. And then you also have, of course, an increasing number of Wall Street firms coming out and delaying the return to office. It seems like we just baked in another couple of months of this pandemic, Tom.
I agree with that. Now, Ningbo, we're getting a little bit of good news there. Maybe China's supply can ease up, or as Dennis Gartman mentioned, at the margin, ease up. But Lisa, I really take your point on the margin of this pandemic. And as Goldman Sachs did in their GDP markdown a couple days ago, they started with a Delta variant.
Well, yeah, and this has become suddenly a new theme to markets. And I think that we've been talking all week about how perhaps this has less to do with potential tapering and more to do with the potential for some of these shutdowns affecting supply chains, affecting growth for longer. And we are seeing that consistently. We also saw the downward surprise to the retail sales following on last Friday's University of Michigan sentiment survey, which came in at the lowest level since 2011. There's been a shift.
Yeah, the 10-year from a 170 in May down to 112-ish, and then a bounce back to 137. And that rollover that we've seen through August has been extraordinary. Nice support here at 123. Kailey Leinz, that devolves to $1, which is correlated.
Absolutely, Tom. Dollar stronger for a 5th day in a row. We are back out on the Bloomberg Dollar Spot Index at the highs we saw last November. And of course, we also were around these highs earlier this year, in March, Tom, when we saw yields peaking. Now it's a very different story of dollar dynamics. This has nothing to do with higher yields anymore. This seems to be the desire for safety and the dollar getting a bit of that haven bid. And this goes back to what Lisa was talking about. There seems to be a tone shift this week and people trying to get a little bit more defensive in this market.
One of the round numbers there not spoken of is the yuan. The Chinese renminbi, 6.50 was the print today, and that is a weaker yuan versus a dollar over the last week or so. Quickly on the data, futures at -20, Dow futures -152. The VIX 23.23 is up a solid big figure. Some of the angst that we saw yesterday morning, and then a reversal, a bid came in on the markets yesterday afternoon, and the angst returns. Returning as well to the wall on radio and television, Lisa Abramowicz, what do you have?
You're sending me right back to the wall. I'm looking at 11 a.m. Dallas Fed President Robert Kaplan is planning to speak. And a real key question heading into Jackson Hole next week is how much is this shift in tone, as we've been talking about this morning, really encapsulating the increasing dovishness of Fed members? Will they prolong their potential tapering schedule because of this? Will he indicate indicate that perhaps he is starting to question the need to taper since he has come out in front of being one of the more aggressive members of the Federal Reserve. Today, German Chancellor Angela Merkel is planning to meet with Russia's Vladimir Putin. They've typically had a decent relationship. This is the last couple weeks of Angela Merkel's tenure as Chancellor of Germany. What will she say about Russia's continual presence in Afghanistan despite the removal of U.S. troops? How much will she press them for some sort of concessions of their involvement in that territory? And then at 1 p.m., we get, of course, the Baker Hughes U.S. rig count. You can grill me all you want on why this is important. I'm watching the oil market in terms of the supply-demand. This week has been about the demand dynamic. How much will that influence supply in terms of suppressing potential output, given the fact that a lot of these companies in the U.S., the shale companies, have gotten new discipline when it comes to financial matters, Tom?
It will be interesting to see. As we prepare for Jackson Hole next week, Lisa Abramowicz and Tom Keene with Michael McKee out at Jackson Hole. Mike McKee, of course, leading all of our conversation in an odd Delta variant Jackson Hole. We're very aware of that. We start strong with arguably the most important interview we're going to have before we travel to Wyoming. Vincent Reinhart owns the research of the American economy. With 24 years at the Federal Reserve System, he is the one who literally codified and invented modern research at the Eccles Building. He is with Mellon, their chief economist. Vince Reinhart, I want you to explain to radio and TV what Jackson Hole really is. A bunch of PhDs listening to dead serious papers. Describe what really goes on at Jackson Hole.
It's the biggest concentration of central bankers, and central bankers love to talk amongst themselves. And so that's the opportunity for them to address what they're all concerned about. And what they're all concerned about now is just how the global economy is going to pull itself out of the pandemic. And moreover, how they are going to pull themselves out of the unconventional policies they've got themselves into.
I had the honor of sitting on the lawn years ago, Vince Reinhart, with the wonderful Alan Meltzer, with Carl Brunner, getting this summer soiree started with the Carnegie Rochester series of decades and decades ago. And it goes to the emotion of these serious events. Willem Bouter blowing up years ago at some controversial paper, the controversy of the late Marvin Goodfriend's paper of 2016. What will be the controversy this year?
I think the big issue is to find out where Jay Powell is relative to his committee. What did we learn this week? We learned that the FOMC, by and large, wants to head to the taper. Ask Rob Kaplan that later today. Wants to start slowing asset purchases. We heard it pretty firmly in the minutes, but when Jay Powell at his press conference was asked about it, he didn't seem anywhere nearly as convinced, nor did he really convey that view of his committee. So which is it? Is Jay Powell really want to head to the exit, or he doesn't? This is his opportunity, if he wants to confirm where his committee wants to go or to slow him up.
How closely, Vince, do you think that Jay Powell and the other Fed members are watching the Delta variant and the various shutdowns that we're seeing, whether it's port closures or whether it's delays to the return to office of a number of different companies?
Delta is the ace card that Jay Powell can pull out of his sleeve if he wants to slow up his committee. I think Lisa and Kailey had it exactly right. What have we learned over the last 18 months? Bad things can happen to good people, and they're very bad. In that environment, you want to buy insurance. That insurance includes Treasury securities, rates are low. That includes staying away from market activity. That's serious. And from a monetary policy standpoint, it brings into the question of risk management. Do you want to head for the exits if, in fact, something bad could happen in between and you're wrong-footed?
Well,
sorry.
Well, thinking about how the Delta variant informs Fed policy, we know this Fed is prioritizing the labor market and the recovery there. That seems to be taking precedence over inflation. And we heard from the U.S. Labor Secretary Marty Walsh yesterday saying that some states who have already rolled back those enhanced unemployment benefits may need to actually put them back in place because of the Delta variant. I mean, how do you think about that factor into the jobs recovery?
Yeah, that's a really important point, and it tells you the problem of leaning forward in an uncertain time. You just may be leaning in as events turn against you. And the really interesting thing about the minutes, Kailey, was, in fact, they were less hierarchical about their dual objective. For the last year, it's always been employment, price stability, the inflation. The second half of the dual mandate was in the background. In the minutes, they said they were worried about, they had made substantial they've made further progress toward employment and probably were at their price stability goal. So they were bringing back that mandate. Now the question is, if they're really worried about the outlook, do they push concerns about inflation further into the background?
Just real quick, in terms of their concerns about inflation, how much do you expect them to highlight how this has been a K-shaped recovery and how the inflationary pressures that we're seeing are actually hampering the people on the lower brackets more than others?
That's what everybody forgets about the 1970s, and that is that inflation is a regressive tax. And part of it is what's that doing to real wages at the lower end of the spectrum. Look, J-PAL has been extremely good in framing policy more inclusively than any of his predecessors. And you've identified an opportunity for him to complain about inflation, not just because it worries the bond market czars.
Vince, I got 30 seconds. I'm so sorry. You and Carmen Reinhart wrote the paper of the summer last year, Foreign Affairs on the Pandemic Depression. Have we exited the pandemic depression?
Absolutely not. A message was rebound wasn't recovery. We still have a lot of lost output in the U.S. And importantly, what we have done is forbearance, not forgiveness. That is, at some point, all those payments rent is going to come due. What's going to happen then?
We are out of time. Let's do it again. Vincent Reinhart, thank you, with Mellon, their chief economist. Futures are negative 21, down futures negative 161. The VIX out, not 2 points, but hey, it gets my attention. 1.63 points, 23.30. Stay with us. Lisa Abramowicz, Tom Keene, Kailey, Leinz, and John Farrow in Creek. This is Bloomberg. Good morning.
With the First Word News, I'm Laura Wright. In Afghanistan, more scenes of chaos at Kabul airport. The US is rushing to evacuate people, but Taliban forces at checkpoints around the airport are making it tough for people to enter. That's raising concerns that citizens will be prevented from leaving. Meanwhile, the White House says the US evacuated almost 3,000 people yesterday. In Australia, Sydney's 2-month-long lockdown will be extended until at least the end of September. The coronavirus's Delta variant outbreak has gotten worse in the country's biggest city. Meanwhile, New Zealand has linked Sydney's outbreak to at least 3 local cases. So the country's 3-day lockdown that was due to end today has been extended until at least Tuesday. It will be the Biden administration's most high-profile trip yet to Asia. Vice President Kamala Harris will look to bolster economic and military cooperation in China's backyard. She'll visit Singapore and Vietnam starting this weekend. Leaders there will look for Harris to reassure them of America's role as a major trading partner. Meanwhile, Harris will be able to raise her international profile. China has taken the next step in taming big tech. Lawmakers have passed legislation setting out tougher rules for how companies handle user data. No details of the new law were immediately released, but earlier drafts required firms to get user content to collect, use, and share information. More pay hikes for junior bankers on Wall Street. This time, according to the Financial Times, it's Goldman Sachs. The firm reportedly has increased salaries for some employees in its sales, trading, research, and asset management offices. Starting salaries are set to rise from $85,000 to $110,000. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
We're aware of congestion around the airport. We are working closely with the Department of Defense to to facilitate safe and orderly access for consular processing on the airport compound. U.S. military and other country flights continued throughout the last 24 hours, and American citizens and legal permanent residents will be given the first opportunity to board, with other priority groups filling in seats from there.
Ned Price for the State Department managing the messages has been happening in Washington on all fronts through an exhausting week. On this Friday, many people writing. I really want to note Richard Haas, who started our week strong with the Council on Foreign Relations moments ago, out with a scathing tweet, emerging reality, a questionable policy, terribly executed, and goes on with his critique of the week. As well, Fareed Zakaria of the Post-American World. I can't say enough about the book. I threw it at my kids and said, shut up and read Zakaria. The NSC met 36 times since April to discuss the Afghanistan withdrawal. Process has become policy. Precious time in meetings, talking rather than executing, whittled down to the lowest common denominator. Preparation and memos, a substitute for effective action. The top 5 tiers of the Pentagon have gone from 363 people in 1998 to 870 a year ago. Emily Wilkins knows of bureaucratic Washington and joins us right now. It's a stunning essay, Emily, of what we've become, not Biden, Trump, Obama, Bush, but the entire 10 or 15 years. How bureaucratic is your Washington?
I mean, look, Washington, to a certain extent, has always been bureaucratic. And I think the point that Fareed Zakaria made in his op-ed is something that you're not just going to see now, but could potentially come up again and again and again over the following months and even years as Congress really begins to investigate what went wrong. I mean, you are seeing committees that are led by Democrats coming out with very tough criticism for the Biden administration on their withdrawal, saying that they want to get to the bottom of what happened. Why was this so rocky? Why are American citizens now struggling to get out? Why are those Afghans who helped the U.S. struggling to get out? There's a lot of questions on this, and if Republicans take the House next year, which there is a very real chance that they do in 2022, then you can expect to potentially see even more investigation into this.
What does the post-Afghanistan world look like?
Well, I think going forward, there's still a lot of questions on exactly how things shake out. I mean, the Biden administration is now trying to sort of pivot focus to their current mission of getting Americans out of the country and getting as many of Afghanis who help the U.S. out of the country. So that's really where they're focused on now. It's what we're expecting to see Biden address later today with his remarks at 1 p.m. But I think there's still many other questions on how this goes. I mean, right now we are still in the middle of the story of the U.S. withdrawing, and I think there's a lot of questions about what happens with a Taliban-led Afghanistan. What does that look like? Right now they're launching this PR campaign trying to say they're going to be fair to women, that things won't be like they are before, but there is a lot of skepticism that those things will come to pass.
Also a question of how this issue and how it's being received internationally will trickle back to domestic policy at a time when the Delta variant very much front and center. I just want to have you weigh in on this. Labor Secretary Marty Walsh saying that potentially some states could reinstate enhanced unemployment aid as a result of the Delta variant and the ongoing pandemic. What are we hearing about how much the federal government's going to push that?
Right now, the federal government, that enhanced aid for everyone is expected to run out around Labor Day. And there's a question on whether or not the White House might say, hey, we need to move this forward. And if they do, how soon do they need to implement that? I mean, the House is coming back next week, but it's only supposed to be for a week. Senate's not supposed to be back until September. House is then supposed to be out until around mid-September. So if they want to move on this, they need to move quickly if they need to expand it, because there's just not a lot of time. And you don't want to have something like what occurred with the eviction moratorium, where at the last minute, the White House was like, hey, Congress, you need to do something. And it turns out Democrats didn't have the votes to get it through the House, let alone the Senate. And it was sort of a week of hot potato, of bad press for Democrats, resulting in the White House finally moving forward. But that's expected to be struck down in a lawsuit at some point.
Emily, you mentioned 2022 earlier, and as we have these two conversations, What is going to inform voters' opinions more when they head to the polls for the midterms? Is it geopolitics, or is it the issues of the Delta variant and things domestically that are really prioritized by the American populace?
That's such a great question. And I think when it comes to the Delta variant, we have to remember that just a couple months ago, we weren't talking about the Delta variant. We were talking about the end of the pandemic, how people were getting vaccinated. And what the Delta variant reminded us is that we really don't know what this pandemic is going to look like at the end of this year, at the start of next year, or in November of 2022. It certainly could play a major role with the election. And there's a lot of discussion about how Democrats handle this. I think that's why when you look at Democrats in Congress, they are very focused on this infrastructure plan and the reconciliation, which includes things like child care, elder care, expansion of Medicare, because they think that those are the things that are going to resound with their constituents, and those are the things that are going to help them win re-election in next November.
Emily Wilkins, a report from Washington. Thank you so much. On Bloomberg Radio, Bloomberg Television, into the weekend, the markets, we're looking at a little bit of weight right now. We're also really beginning to shape a Fed policy of a sort of kind of like virtual Jackson Hole. What is it, Lisa?
It's a hybrid model. It's sort of semblance of the school that we're about to experience come fall, when everybody goes back to what is supposed to be in person, but I expect will be hybrid, just to sort of editorialize. Just want to bring this to you. The theme of this particular conference is economic policy in an uneven economy. And if they're talking about the uneven wealth distribution, the uneven job recovery, how are they going to talk about Fed policy with respect to that at a time when their policies are propping up, frankly, the upper tiers in terms of wealth distribution? And you just wonder if this is the theme of their conference, how they're going to address this and how they're going to look inward in terms of their role in this dynamic.
That's exactly right, to look inward. And what I'd say, Lisa, is this started with Charles Evans out at Chicago in an important conference, I'm going to say 2 years ago, about, to make a joke about it and to be light, a more sensitive Fed. And I do agree with you. I think we're going to see a lot of that at Jackson Hole. I'm not sure anybody's going to be listening because they're all worried about Powell and taper. Peter Bookvar publishes moments ago, he thinks the speech could be a non-event.
Well, I think a lot of people think it's going to be a non-event. And I wonder, though, if Jay Powell is going to indicate some sort of delay. I mean, if he basically says, he comes out and says, look, we're not going to taper as long as these shutdowns persist, or he indicates that we're very far away from substantial further progress, that'll move markets.
An incredibly important note to make here, folks, and this will be somewhere south of New York. I believe it's next Friday. A pre-party for a certain wedding. I think 700 scheduled to attend. There will be TV monitors there Friday morning for the Powell speech. Kailey, you're going to have those lined up for your soiree, aren't you?
Totally. 100% the focus of my wedding weekend, Tom, will be Jackson Hole.
That's what we like to see.
Whole theme.
Most romantic thing I can think of, honestly.
I'll show up and steal.
Kailey, honeymoon to Jackson Hole for the speech.
The shores.
So romantic.
The shores of Jackson Hole.
The shores. It'll be just spectacular.
Marital
bliss. This is Bloomberg. Bloomberg Surveillance. Good morning, everyone. Futures at negative 16, Dow futures negative 127. The VIX 22.90, somewhat like yesterday. Some gloom out there and maybe a bid being put on here at 7:30 Wall Street time. And the yield space, as they say, a 123 on the 10-year yield, a 122 there would be noteworthy with some curve flattening. Dollar stronger. And I do want to note, overnight repo goes out to 1.1 trillion. That wall of liquidity, one symbol of the liquidity that's out there. We'll talk to Gabriela Santos about this here in a moment. Right now, and as Gabriela puts in her research note, there is China, and that's where Romaine Bostic starts this morning.
Yeah, that's definitely where we're going to start, because that sell-off that's been going on in China's stocks, as well as the ADRs here in the U.S., that's pretty much unabated at this point. You talk about Didi, which yesterday closed down, those ADRs down about 49% here from that all-time high. You talk about NetEase, you talk about Alibaba, all moving lower here. In fact, the MSCI Asia Pacific Index on pace for its worst week going back to February, and the K-Web China Internet ETF on pace right now for what could be its worst week since its inception going back to 2013. The regulatory overhang, it is not clearing right now. DD lower by about 1.7% here in the pre-market. Net ease, those ADRs down about 1%. Keep an eye on the vaccine makers as well. Moderna, unfortunately, moving in the wrong direction. A Washington Post report out raising renewed concerns about heart condition risk with regards to its vaccine. And, of course, a delay of about 1 week in the CDC finally signing off on what Biden wants, which is authorization for booster shots. Flip up the board. Deere earnings were out. That is one of the bright spots here in the pre-market. Those shares had been moving a little bit higher on a beat and raise quarter for the company. Of course, they're benefiting on the back, of course, of a lot of that boom in crop prices that we saw earlier this year. That's abating a bit, but you still got an aging fleet of farm equipment out there here in the U.S. as well as down there in Latin America, and Deere has pretty much been riding that wave. I want to end, though, on a note about SPACs here, Tom. Pay attention here, because this is important. Jason Mudrick, who I'm sure you're familiar with, he had a great SPAC here. They couldn't find anything to buy. They were supposed to buy distressed assets. Instead, he bought a baseball company called Topps, baseball card company, I should say, called Topps. That was a big deal. It was announced back in April. Well, last night we learned that Major League Baseball has basically decided to end its 70-year partnership with Topps and give that deal to Fanatics. So pretty bad timing here for a SPAC deal that actually isn't even complete, Tom. They still got to complete this thing.
What about
a lot of concern. You want to know about Ackman?
Please.
Tom, you ponied up almost $4 billion to go into this SPAC that Bill Ackman set up earlier this year. Of course, he had a lot of trouble sort of getting this thing off the ground, finding a big deal for it. Of course, last night, he came out with a letter, and he said, take your money back, Tom, for all $4 billion of it. He's going to return. Right now, you're looking on your screen here, that SPAC trading below that $20 offering price in $19.75.
Right.
It closed below that yesterday. We should point out here, in addition to asking folks to come get their money back, he's saying he's not abandoning this idea completely. He's moving to Sparks now.
Did you age, Romaine? Did you age last night?
Did I age?
Did you age last night ordering school supplies?
Oh, okay. I didn't know where this was going.
This is like chewing glass.
Have you actually been in a Target or anywhere and tried to buy? I know you don't actually go into a Target, but your wife or someone else in your family who probably does all the house.
Probably.
Yeah, does the real work there.
Thank you. Romaine Bostic, thank you so much. On a Friday in August, it's always important. And on Bloomberg Radio, this plays so well. I went into the closet this morning. My closet with my suits is about, in the West Wing, Lisa, it's a good 30 feet long.
Seen it.
And, I said blue is the only way to go. And I come in and, Teal's got the blue thing going and Lisa's got the blue thing going. And I said, cancel the guest at 7:30 and find someone in blue. Gabriela Santos joins us now in JP Morgan Blue, and that is always good to see. Gabriela, thank you so much for joining us on a Blue Friday here. And one of the things you talk about is something John Farrow in his gloom on the way to Crete talks about, which is the drawdown. And you say, and particularly with China, drawdowns are normal. We should not be afraid of the Farrow drawdown.
Well, this drawdown we're seeing in China is absolutely business as usual for investing in Chinese equities. Every year you should expect a 20% annual correction. And every 3 years or so, you tend to have an over 30% correction. We had this in 2018, we had it in 2015 and 2011, and it's unrelated to the economic cycle. It's related to China's regulatory and reform campaigns, which tend to happen every once in a while. It takes time to rebuild confidence, but 3 months out, Chinese equities tend to be up 10%, and 6 months out, they tend to be up 20% during these moments.
Wait, hold on a second, Gabriela. Are you saying that it's a good time to go buy Chinese equities?
We fundamentally disagree with the thesis that China is now uninvestable. And that is not what we're speaking to our clients about or hearing from our institutional clients. It's really still a story about building a strategic allocation to Chinese onshore equities and onshore bonds. To me, that is one of the most important themes of the next decade, is the rise of China in portfolios. And it's really just about navigating these moments of volatility and thinking carefully about how to invest in China rather than going through an existential crisis every time we get these drawdowns. And in fact, it's what one of your guests said, the CEO of the Norwegian Sovereign Wealth Fund on Wednesday, not rethinking that long-term allocation to Chinese onshore equities.
Well, let's talk about how to invest in China. Let's go there, especially at a time when you've got so many cross currents. You've got the regulatory uncertainty around the shifting priorities of the executive leadership in China. You also have the slowdown that you're experiencing, as well as the COVID policies, which are much stricter than in places like the United States. How do you parse through all of this noise and figure out how to allocate at a time of such incredible uncertainty?
The noise is so high right now. The volume is extremely high. I think the trick is not to see each thing China says or does as an independent development, right? It's all a piece of a bigger puzzle. And what is that puzzle? It's all about this new phase of Chinese development. It's moving from a middle income into a high income country over the next 5-10 years. And it really wants to shift from the quantity to the quality of growth. And everything it's been doing over the past few months is aligned with that long-term plan. And what's quality? It's growth focused on innovation. What's innovation? It's not internet and social media. It's deep technology and renewable energy. And it's quality also in the sense of the quality of life for workers, for customers, and for merchants.
Well, you talked about renewable energy there, Gabriela. China, of course, is trying to reach net carbon neutrality by 2060, and it wants to have peak carbon emissions by 2030. And I'm wondering how you just kind of think about that green transition when talking about an economy and a growth trajectory that has been powered by the industrial economy.
So an example of how China, we tend to think about China as being really difficult from an ESG perspective, and it is starting from further behind than other countries. But this is an example of China moving in the right direction here, thinking about the E. And China's extremely serious about this energy transition because it's focused on reducing pollution and improving the quality of life for its people. And this is going to involve a lot of carrots and sticks. Right, carrots in terms of developing its domestic renewable energy market, solar, wind. Carrots in terms of boosting the penetration of EV auto sales. China's already the largest EV market in the world, and this is just the beginning. And it involves sticks. China launched an emissions trading scheme this year to put a price on carbon and increase the cost for heavy industry. So it's all about that transition to higher quality growth and really navigating the winners and losers in that phase.
Well, and we've seen this borne out in commodities, specifically when you look at iron ore futures in Singapore. I mean, they're trying to pull back on steel production. A lot of that has to do with environmental concern, and that has shown up. But it also, the other side of that is the growth concerns that Lisa was alluding to. And I'm wondering how you think about PBOC policy here in a decelerating China.
One quick comment on the commodities. Yep, they're losers, kind of some of those heavy metals like iron ore and steel, but they're also winners. Something like copper, for example, which is a huge input into renewable energy and electric vehicles. So a perfect example there. And in terms of policy, I think the way to see this is China, every time it has a growth slowdown, it's going to step on the accelerator less and less. So unlike, China 5 years ago. So it's very targeted easing here, maybe a reserve requirement cut or two, very targeted towards credit in high-end manufacturing and private industry. It is not that old China that lifts all boats.
Yeah, Gabriela Santos, thank you so much. There on China, some of the optimism within a Pharaoh-like drawdown. Lisa Abramowicz, I really want to highlight the conversation we had with David Stubbs of J.P. Morgan earlier this week. I thought he was brilliant on the optimism of applied technology in the coming 10 years.
This idea that we haven't seen productivity really gain in terms of adding to growth in the United States and adding to wage increases, which really fuels positive inflation, good inflation, saying that that could change because of some of the technological advances, and saying that he's using that as a guidepost of how to invest. And certainly we have seen a lopsided market recovery, a lopsided market surge in some of these big tech names and others that have adapted well. And you do think about how much are we exiting the pandemic with a different economy? And this is really one of the questions, basically, what is the post-pandemic norm and how much are we fast forwarding to a more technologically advanced time?
And Kailey, it really speaks, though, to the society that can be benefited by technology versus so many others left behind. Again, a theme at Jackson Hole.
Yeah, and a theme for Elon Musk at Tesla's AI yesterday as well, Tom. I mean, he was talking about basically humanoid robots. And I think he had someone come on stage in an outfit to kind of demonstrate that robotic movement. But his whole point was we are heading toward a future where humans are going to have to do the mundane kind of taxing everyday tasks. We're going to have something else to do it.
I'm not there. I've heard this for like 30 years, Kailey.
You're not where?
Robots
dressing up like a robot?
over. I've heard robots are going to take over since, 1975, I'm guessing.
Well, yeah, it's sort
robots
of like
taking over.
Yeah, Doctor Who.
Robot invasion.
Oh, Al emails in. Thanks, Al, for watching this morning. Al says, yeah, next year a robot in for me. Thank you.
That'll be fun.
Thank you. Okay, well, the market's better than it was an hour ago. We're moving forward here. On a Friday, stay with us. Important conversations to set up the end of August and on to September. This is Bloomberg. Good morning.
With the First Word News, I'm Laura Wright. The biggest tax hike on wealthy Americans since 1993 is bogged down in Congress. The tax writing committees in the House and Senate are almost certain to miss their September 15th deadline for coming up with details. The problem is that lawmakers don't know how big President Biden's spending package will be. Plus, lawmakers have different ideas about which tax measures to enact. A defeat in court for the Biden administration on immigration. A federal appeals court has told the government to reinstate the Trump-era policy requiring asylum seekers at the southern border to wait in Mexico while their cases are being processed. The Biden administration had allowed asylum seekers to wait in the U.S. The case is likely to end up in the Supreme Court. In Texas, a setback for Governor Greg Abbott's efforts to suspend school mask mandates. The state Supreme Court has given local school officials temporary permission to require students to wear masks to class. Abbott had said wearing masks should be a matter of personal responsibility, not a government mandate. The world's largest auto factory is being hit by the global semiconductor shortage. Volkswagen's main plant in Wolfsburg, Germany, will operate only its early shift in the week following the summer break because it can't get enough of the chips. Meanwhile, VW's Audi brand is extending the summer break by 1 week at its 2 factories in Germany. The largest maker of agricultural machinery, Deere, raised its full-year fiscal outlook. Surging crop prices has led to demand for new equipment. Still, Deere's competitor, AGCO, warns that a massive rise in steel prices has caused a slowdown in tractor purchases. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
We need to just be true to our mandate, which is to say, are inflation pressures rising? Are we at or above maximum sustainable employment? And hence, should we be back more at a neutral interest rate? What would change that view? Well, you would have to see a significant shock to demand.
Adrian Orr, he is governor of the Reserve Bank of New Zealand. It is a central bank of great importance, particularly in the discussion of inflation targeting. They've been leaders in research for decades and decades. And Governor Orr out of Leicester in London and, of course, in New Zealand, providing the messaging there, given the Delta variant. We welcome all of you on Bloomberg Radio and Bloomberg Television, and particularly enjoying with Lisa Abramowicz and Kailey, Leinz, John Farrell off today. The fact it is a Friday, and everybody got the memo.
Yep.
And we continue. I should be on Bloomberg Radio.
It just gets better and better.
Ira Jersey joins us from Bloomberg Intelligence. And, of course, I don't know what to say. On radio, it's teal, teal, and teal is what we've got. Teal cubed here. Blue is the theme today on Bloomberg Surveillance. We thank Ira Jersey for his wisdom. Ira, overnight repo. There's going to be all sorts of stuff written Friday afternoon in the Gloom Press about overnight repo going through $1 trillion and now out this morning to $1.1 trillion. That overnight trust money grows and grows and grows. Why should we not be worried about that wall of liquidity?
Well, it shouldn't be a worry, but it does show, I think, very importantly, Tom, that
there's plenty of cash in the system right now. Matter of fact, more cash than investors and banks know what to do with. So it's one of the reasons why the Federal Reserve, in continuing to create all this cash via its asset purchases, it's one of the reasons why I think that Jay Powell next Friday will talk about, some of the reasons why it might be time to start pulling back those asset purchases. And we've been pretty firm that we thought it would start at the end of this year, and in large part because we're going to see 1.3, 1.4, 1.5 trillion dollars in use of the reverse repo facility.
If they put assets out on the market, that is price down, yield up. But is our experience that that's a manageable reaction function or glide path?
Well, I think this is going to be significantly different than what happened in 2013. So you probably won't have a tantrum. For one thing, we're still 75 basis points off of the lows and about 60 basis points higher in terms of 10-year yield from where we were at the beginning of the year. So we've already done part of the work. The other question is, and I think the market reaction function might be a little bit different this time, in that we have an idea that you might get a bad outcome and some volatility in risk assets. So, for example, my colleague, who you know very well, Gina Martin Adams, she's worried that as the Fed starts to taper, that equity markets might actually start to have some problems continuing to rally, and that will probably lead to a little bit of a risk-off move and benefit Treasury yields. So I do think Treasury yields would be higher, but they're not going to go, I don't think, 100 basis points higher this time on taper. It's more like 30 to 50 basis points. So something manageable. You still have sub 2% 10-year yields. That's still pretty accommodative for the economy.
Okay, so bear with me to be a bit nerdy on this Friday of teal. What is the transmission mechanism of tightening if a Federal Reserve taper ends up with yields where they are now? And I'm talking about a 10-year yield. And in the recent hawkish types of pronouncements, typically what we've seen is longer-term yields go down. If that is the trend, then why would risk assets sell off, since a lot of people have justified low yields for the reason why they're buying riskier securities?
Well, I think that's a good question, Lisa, but I think a big question mark is, how far will the Fed go? So right now the market's pricing for a terminal Fed funds rate of around 1.25%. So it makes perfect sense that the 10-year yield would be right where it is. But I think those expectations end up changing as you get further into 2022. And as those expectations of how far the Fed can go, because the economy maybe is doing pretty well, we get through Delta and people just learn how to live with, having an endemic instead of a pandemic in terms of COVID, then we wind up in a situation where people think that growth and inflation can be more sustainable, close to decent levels. Yeah. And that's when people start to think about maybe the Fed not hiking to 1.25%, but instead to 2%. And that's when you wind up seeing those higher Treasury yields. But we're not there yet, right? So there's a timing aspect to this. And of course, as any central bank and certainly an economist will tell you, there's a lot of uncertainty around that at the moment. Like, will we be able to sustain reasonable growth on a forward basis, allowing interest rates to be significantly higher without dampening demand too much?
Yeah, so Ira, I want to build on Lisa's point here about rates staying low being beneficial to the equity thesis. And I've referenced this a few times this morning, but our colleague John Authers put out a piece about TINA this morning and how TINA just isn't going away because of low rates. But one of the other issues he alluded to was China, and the fact that if you're worried about a slowdown in Chinese growth and the ripple effects that could have across the world, what you're going to do is buy treasuries. How do you think about kind of the foreign buying in that?
Yeah, we actually put out a piece just earlier this week about that foreign demand, and what we have seen is a little bit of a turnaround. So foreign demand in general for Treasury securities basically stopped for about 5 years, and actually foreigners right now used to own almost half of the Treasury market. Now they own less than 35%. Wow. So but that's turned around quite a bit in June, in particular, and you see private investors coming back to the market, and that is that that risk-off flows that you've seen. And I think you probably saw that in the 10-year auction just a couple of weeks ago, where you had unprecedented demand from indirect bidders, that's end users of treasuries, and they bought 70%, which we've never seen that before as far as the data that we have going back about 20 odd years. So we'll get that data on Monday as to whether or not that was foreigners or if that was domestic investment funds who've been really the big buyer. But yeah, I think when you have risk off, when you have a slowing economy in China, you will see excess demand end up in treasuries.
Ira Jersey, thank you so much. Greatly appreciate it. Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Lisa, it goes to the auctions. It goes to the supply that may or may not come on. A lot of people are hinged on supply not coming on, being diminished.
The idea that the Treasury Department is actually going to be reducing issuance of coupon securities in the upcoming months. And so basically what you have here is you've got less supply, less securities for sale, and a Federal Reserve that's staying on hold with its $120 billion
So that's
Treasury
price
purchases.
Up, yield down.
Correct. That basically
Did I do okay
is.
there?
That was
Okay.
fantastic, Tom.
Thank
Really,
you.
it was almost worthy of teal. But
Edge
not
of Fobosi.
quite. Yeah. No, I mean, this is going to be one of the most interesting dynamics going forward.
Well, and it's interesting, we talk about Steve Major, who has been kind of firm in his 1% call on treasuries. That's his point, is that even when we get the Fed taper, it's going to be offset by the fact that the Treasury isn't going to be issuing as much supply. And it definitely is an interesting dynamic to keep an eye on, especially as we get out toward November, when the Treasury might indeed pull back on those issuances.
It's an interesting Friday show. And, you know, Lisa, I look at this, and it is the pendulum of bluer than blue, you know, off of the late Michael Johnson and his wonderful song. I mean, you know, on radio, it's a sight to behold. Everybody's bluer than blue.
You're not missing too much.
Sadder than sad.
So sad.
Pharaoh leaving is the worst thing I ever had.
Oh, please sing. Go on.
I'm blue. Draw down blue.
This is Bloomberg.
Thanks, guys.
The economy will continue to not boom, but be really quite expansive, quite strong.
We're not going to have what we think of as a normal cycle. We're just going to see a steady growth in the economy.
The consumer is still seeing a strong economy. They just are a little bit less excited to participate in it.
It's not so much about the inflation, in my view. It's about what the Fed is going to do about it.
For the last year, it's always been employment, employment, employment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
A blue Friday, a down day, assessing the risks of a prolonged pandemic. Good morning. This is Bloomberg Surveillance on Bloomberg Radio and Television. Tom Keene, Lisa Abramowicz, Kailey Leinz in for Jonathan Ferro, who is off writing a book on meditation. Tom, there is a shifted tone today and this week all throughout, basically an increase in number of banks basically saying we're going to delay return to work. You've got an increase in the potential supply chain disruptions with Toyota Motor coming out and reducing its expectation for production. It seems like people are rejiggering their sense of inflation and growth tone.
We're being tested, but I'll take your point that there was a shift in tone. And to me, Lisa, it's much more about the calendar. August has always been tumultuous. August has always been, we don't know what's going to happen. We have the Afghanistan overlay, which is appalling. But Lisa, to your point, it's about the absolute mystery of Q4. And the guest we've got coming up here has some optimism about that Q4 economic growth.
Yeah, and John yesterday was talking about that. A delayed pandemic, not necessarily a deferred one or a diminished one. This idea that we could get that growth resurgence in the fourth quarter. However, you do still have that port closure in Ningbo in China. And I was just looking at reports out of the Wall Street Journal saying that it's likely to continue through the end of the month. Tom, how much are we expecting to see those margin pressures really increase for companies that have, for the most part, been able to pass them along?
I have always been skeptical about the angst over margin pressures. There's been angst over margin pressures, Lisa, since time began. It's actually, I believe it's biblical, I think Old Testament. But the basic idea, Lisa, is it's always there and corporations adapt. We saw that with John Deere an hour ago.
Well, and just for the biblical interpretation of margin pressures, here's Kailey Leinz. Kailey, there is a question, though, of what we've seen, which has actually been the incredible ability to pass along some of these price increases, but we are seeing the runoff of some of the enhanced unemployment benefits.
Right.
How much are we hearing about the concern in companies from some of their earnings releases.
Well, and it comes down that the company only has the ability to pass the cost on to the consumers if the consumers are tolerant of that and will still buy those products even with prices are higher. And as we've seen waning sentiment and confidence, we saw that with the read last Friday, the consumer confidence falling to the lowest level since 2011. If consumers specifically on the lower end of the wage spectrum who feel higher food prices and prices at the pump more strongly than others start to say we are no longer going to tolerate higher prices for discretionary goods because we have to buy groceries and gas, that may make a difference when it comes to that margin
Kailey,
story,
you're
Tom.
sitting too close to Lisa. You're just getting gloomy.
It's because we match. It's a mind meld at this point.
Seriously, we might as well be the
Mind
same person.
Meld Friday. And again, on radio and TV, it's a Blue Friday. Thank you, Ira Jersey and Gabriela Santos, for getting the memo and paying attention. Let me do the data check right now. On a Friday, it's an important data check after the recovery in markets yesterday. We go down -17, Dow futures -143. The VIX tells me a lot, 23 handle, and has improved to 22.91. The yield space, 123, comes into 122.83. That's a lower yield. That really bears watching into the safe haven weekend. The 30-year bond, 2% down now to 1.86%. Dollar stronger, 93.67 as well. So we'll have to see how that goes. Right now, a briefing, always nuanced. Patrick Armstrong joins us with Plurini Wealth, their chief investment officer, and really well-timed, Patrick. Have you changed your allocation, the nuances of your portfolio this week?
Not significantly, really. I've been adding to some of the positions I have confidence in. So it's not been wholesale changes. Basically, a lot of the cyclical.
Patrick, there's only like 5 or 6 people watching. Which of those positions you have confidence in?
So ArcelorMittal was down 7% yesterday. It's around down 0.5% today. It's a company trading at 4 or 5 times earnings, depending on your forecasts. When it reported earnings, it's raised its guidance. China's put some policies in place that are curbing steel demand, iron ore demand, things like that, and those are short-term blips. But I think we've got a reflationary backdrop still in place. I think it's reflation for longer. I think the U.S. gets to infrastructure spend. Both sides want it. It's always difficult to get there, but I think they'll always get there, especially if there is any economic weakness, and that'll just be the catalyst that pushes through the infrastructure deal. So I think companies that are pricing an earnings cliff that may not exist. Moeller and Maersk on the shipping side of things down a little bit recently. We added to that again yesterday as well. Another stock trading at ridiculously low multiple of about 5 times earnings. People think these shipping and logistical issues and Moeller Maersk can charge whatever they want right now for freight rates almost because anybody manufacturing something in China wants to get that to the West, you've got to ship it, and there's not enough there's not enough ships available to do it right now. So there's a lot of pricing power, and I think those kind of things stick for a little bit longer than what the market's pricing in.
There's good reflation and there's bad reflation, and I would love it if you could weigh in on the margin pressure. Are we adequately pricing in the margin compression that we're getting in companies that do have to rely on passing along those costs to consumers that are going to feel the crimp of ending enhanced unemployment benefits?
I always think there's margin risks as well, but for the S&P 500, if you look at it in aggregate, it's technology. It's such a dominant part of the market cap, and when you look at the earnings, it's those kind of companies don't really have significant margin pressure. Facebook and Google, the restaurants reopening, hotels opening, travel, all of those companies are advertising. They can charge what they want because they're the best place to advertise. I want to own the stocks in cyclical industries, though, that are creating margin pressures for other companies that have to buy their products. So as I talked about, ArcelorMittal produces the steel. If you're building a wind turbine for green energy, you've got a lot of steel costs in there. If you're shipping your goods, Moeller Maersk. So I think margin is a risk if you're a price taker, but if you're producing the scarce good or have that resource that everyone needs, I think you can price those things up, and that will create some margin pressures in some areas. But those are the companies you want to own.
So if you're kind of pro-cyclical assets in that regard, where are you bringing in the defense? Do you do it in technology?
So I own Alphabet, I own Facebook. They're plays that they are cyclical stories, as I said, because the advertising on them, those are cyclical companies in the reopening economy, and they're getting massive ad revenue and eyes on their pages from that. So I like those. The defensive parts I'm not really attracted to. I like telecoms companies in deflationary environments. So Japan, Nippon, Telephone and Telegraph, you get a dividend yield of around 3% against a deflationary backdrop. That's a significant real yield as a dividend. So I am taking risk right now, but I'm putting it on cyclically. I'm actively doing that. You've either got to take massive valuation risk or cyclical risk if you want to get returns. I prefer the cyclical risk right now.
Patrick, do you care about Jackson Hole next Friday?
A lot. I think it's naive not to, and I think it's actually going to be a catalyst because I think Jay Powell will be irked a little bit by the market's reaction. I think he's one of the more dovish members. He's obviously the chair, and he doesn't get to dictate things necessarily, but I think he's driving things, and I think he's going to want to say more progress is needed before the taper is done, and there's going to be caveats. If there is any weakness, if there is a Delta variant slowdown, tapering's not necessarily embedded.
Patrick, this is really important. We just spoke to Vincent Reinhart, of course, essentially a member of the Fed with his 24 years of research experience there. You're a rude guy. You can actually say what you think. Is there a Powell style at the Fed? Is this a speech where he reasserts that the chairman's in charge?
I suspect it will be. I think he's really going to want to take control of the narrative, and the minutes have sort of taken that from him a little bit, and I think he'll want to reassert that narrative that further progress is needing. I actually think we do get the taper because, as I said, I've got a pro-cyclical bias. I think growth is going to be very good, and we're going to get that incremental progress. But I think Powell will want to reiterate that it's not baked in 100% yet. There's still progress needed, and I think that'll be his tone. And I actually think that'll be very supportive to risk assets.
Patrick, thank you so much. Patrick Armstrong with Plurimi Wealth, their chief investment officer this morning. Very controversial. I didn't expect that, Lisa. I mean, there's some real oomph there about what we're going to see at Jackson Hole.
He basically is justifying our trip out there to the shores of Jackson Hole. So thank you, Patrick Plurimi, for that was really good, Patrick Armstrong. You justified our two-pronged flight out there. Honestly, I think it's going to be interesting to see who shows up. Normally there's an international audience, and this year there will not be. It will just be domestic. We have Jay Powell, who's not going to be going. Vince Reinhart said that he's not going. They decided that they were going to avoid this one. Just interesting to see what will be decided, how some of these conversations, Tom, will take place.
Yeah, I think so. Lisa, I want to go to what you've been on all week. I'm doing the math here right now, folks, in the Bloomberg terminal. You can do that with a graphing function. Oil's down 17% from the peak. Lisa, who would have thought?
Yeah, and the idea here that it's coming from the demand side. Who would have thought that we would get this resurgence in the Delta variant that would cause slowdowns and shutdowns and disruptions that we really thought that we had gotten past? And the psychological impact of that, if nothing else, is significant. What we saw actually is a surplus, a stockpiling of gas. Basically, we didn't get as much demand for gasoline in some of the recent data out of the United States. People are going to fewer places. Tom, are you?
No, I think demand's down. No, I've sensed it. No, anecdotally, I've sensed it. I mean, Kailey, what do you see? Where's demand? I mean, do you see people canceling travel?
I do, Tom. I mean, as we all well know, I have a wedding next weekend, and we've already had, because of the Delta variant, some people saying, hey, it's not the best time for me to be getting on with a big group of people, which I think is a concern for a lot.
Kailey, that was Pharaoh making it up. He's actually writing his meditation book.
Potentially, Tom. But I do think people really do have concerns about this variant. Given how many breakthrough cases there have been, even those who are vaccinated, I think, are less confident. We saw that 3 senators just yesterday announcing that they had tested positive after being fully vaccinated.
Is the weekend still on to play your wedding?
The weekend?
The weekend.
With no E at the end of weekend?
That one.
That weekend?
They're coming in teal.
Slotted in to do the wedding.
Yeah. Still to be confirmed.
Okay, to be confirmed. We will see. We will miss Miss Leinz next week at some point here. Stay with us. This is Bloomberg.
We'll miss her at some point.
Eventually.
With the First Word News, I'm Laura Wright. In Afghanistan, there's growing urgency to evacuate thousands who worked for the US, other Western countries, and news organizations. That's because of evidence that the Taliban is carrying out reprisals, even after the leadership promised an amnesty. The US says it evacuated about 3,000 people yesterday from Kabul's airport. In Australia, Sydney's 2-month-long lockdown will be extended until at least the end of September. The coronavirus's Delta variant outbreak has gotten worse in the country's biggest city. Meanwhile, New Zealand has linked Sydney's outbreak to at least 3 local cases. So the country's 3-day lockdown that was due to end today has been extended until at least Tuesday. It will be the Biden administration's most high-profile trip yet to Asia. Vice President Kamala Harris will look to bolster economic and military cooperation in China's backyard. She'll visit Singapore and Vietnam starting this weekend. Leaders there will look to Harris to reassure them of America's role as a major trading partner. Meanwhile, Harris will be able to raise her international profile. More pay hikes for junior bankers on Wall Street. This time, according to the Financial Times, Goldman Sachs is extending the raises beyond investment banking. The firm reportedly has increased salaries for some employees in its sales, trading, research, and asset management offices. Starting salaries are set to rise to $110,000. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Consumers still think the employment outlook is very strong, but their views on returning to work have declined substantially. So I think the consumer is still seeing a strong economy. They just are a little bit less excited to participate in it, because of the Delta variant and other things. And I guess the question there is one of persistence. How long will it take them, to be convinced to get back fully engaged?
Stuart Kaiser, smart interview. I think we did that yesterday with UBS in derivatives, the dynamics of the equity markets. A lot of different opinions out there. We'll frame them for you through the morning on Bloomberg Radio and Bloomberg Television. Right now, Lisa Abramowicz, Kailey Leinz in for John Farrow. I'm Tom Keene. And with us now, Therese Raphael, writing for Bloomberg out of London. She was absolutely definitive on Brexit and extends it now to the debacle in Afghanistan. Therese, I want to go to Robin Niblett of Chatham House, someone who's given great support to Bloomberg surveillance over the year. Niblett, part of Europe's unstated price for helping the U.S. manage China is continuing American engagement with Europe on managing Russia, which is the more proximate and persistent threat to the interests of many European governments. And the same goes for the failure in Afghanistan. It devolves back for Europe, Therese, to Putin in Russia. Set up the axis of Putin in Moscow with Kabul and to all of Europe.
Well, I think Rory Stewart said it really well in interview after interview. He says it's very easy for China and Russia to simply say to their constituents, to the weaker powers that they dominate in the region, look, you cannot rely on these people. You cannot rely on the U.S. anymore. The U.S. is no longer willing to intervene in the region. We also heard it from the Latvian defense minister, and I think the withdrawal there is has just such far-reaching reverberation simply because of the message that it sends to that region, and this in turn requires some really hard thinking from the UK and its NATO allies on what it's prepared to do to try to send a signal to Russia and to smaller countries in the East that are under the NATO umbrella that there is a willingness still to defend their interests and also a means to protect against potentially resurgent terrorist threats.
As a student of this, and no one has a clear answer, Therese, but what is the Russian mood of the Soviet failure of 1978?
I mean, I think the Russians have had a lot of time to digest that failure, and they probably have looked on at the American, / coalition intervention, and been surprised not at all that it's ended the way it has. That said, I think had Biden made a stronger case for what was accomplished in the last 20 years, it stands in contrast to the Russian intervention that ended in such defeat. We had 20 years in which Afghan women worked and girls went to school. So there's a very different record. But from the, in terms of the propaganda that we're going to hear from Vladimir Putin, it was a defeat just as the one Russia suffered.
Therese, can you give us a sense of Afghanistan as a strategic place of importance, the idea of why Russia, why China, according to some reports, may be interested in shoring up its connections with this nation?
I mean, Afghanistan stands at a crossroads on so many levels. There's obviously the drug trade, the opium trade, the huge amount of money that generates. There is the potential and history of harboring terrorist groups. There is also the potential to radicalize neighboring countries, Tajikistan and Uzbekistan, which, by the way, provide a huge number of foreign workers into Russia. So this is an area where Putin is not going to be so comfortable with the U.S. withdrawal, because he's going to have to contend with the possibility that ultimately a Taliban radicalization of forces in neighboring countries will impact Russia. So on so many levels, from trade to drugs to terrorism to a spread of fundamentalist influences, Afghanistan is going to be pivotal. And I think there's an open question of whether the country is governable at all, and whether the Taliban, 20 years on, are capable of doing that.
Well, Therese, given the international interest and the strategic importance of Afghanistan at this point, what does the international community want to hear from President Biden when he takes the stand today at 1 p.m., given that he is going to be addressing critics both domestically and internationally?
I think from the perspective of Britain and America's NATO allies, this is the time when they want to hear Biden accept some responsibility for the way this withdrawal has been managed. They also want to hear a renewed, a reiterated U.S. commitment to helping vulnerable Afghans leave the country. They want to hear that the U.S. will be very much involved if there's any threat to America's allies from terrorism, from the drug trade. They really want to hear that Biden was serious when he said America's back, because I think right now, from where I'm sitting in London, there's the impression that really it was the Trump-era America First policy that has carried through more than the rhetoric of the early Biden days.
Therese, are we looking at a United States that could lose its status as a global hegemonic power?
Well, I think the credibility is hugely damaged by this withdrawal. There's no question for me that this is an enormous moment in reshaping, the balance of power. Now, that's arguably been happening for a long time now. I mean, when we saw the resurgence of China and the ability of a country that has not embraced democracy to be prosperous, that already sent a message to autocratic powers that there was this other way. It's now up to America to say what it's willing to do to defend the record and the ability of democracies to project influence. And so I think this is really an inflection point, and we say that a lot, but we're really seeing it in the way the Western allies have responded with real dismay and anger and a lot of confusion to the manner of the U.S. withdrawal.
Therese, thank you so much for the conversations this week. Somehow I think we'll discuss the great game next week. Therese Raphael writing in London for Bloomberg Opinion. All of us, Lisa, really, really sobering. And the question is, the weekend doesn't matter. We've got to get to Monday, and it is an extremely fluid cobble.
Yeah, it's a fluid cobble, and it's a fluid reaction in terms of both the international community and President Biden. Evidently, he's going to outline at 1 p.m., and this is the expectation anyway, the efforts that the U.S. has made to airlift all allies and U.S. members out of Afghanistan. How much can he counter some of the criticism that just has been rising, Tom?
And Kailey, we see very quickly here, we see the comments today by the president where he just has to change the tone.
Yeah, it is, though, a tone of what the international community wants to hear and what Americans domestically want to hear, Tom, because while everybody feels the situation in Afghanistan, it may not be the number one priority when it comes to voters, and that, of course, has implications for the midterm elections. 2022, not all that far away.
Futures -15. This is Bloomberg. Good morning. Bloomberg Surveillance, good morning on a Friday. We're looking at a number of different themes here. The markets, of course. I'm going to say weaker, a little better than they were 2 hours ago. Futures at negative 15, Dow futures at negative 145. But a number of cross currents here, a word I've used too much this week as well. Lisa, what's your lead cross current right now?
I think that the lead cross current, frankly, is the dollar. I think that that's actually the most interesting aspect of this week. That has been the decisive move, the strongest since November versus a basket of its peers. If you look at the Bloomberg Spot Index and you take a look at that and you think about coming into 2021, I know I've said this before, but just all of these bearish dollar calls that got totally upended. What does it mean to have a strong dollar at a time of global resurgence, reflation? Does it undermine that concept, Tom?
Lisa Abramowicz and Tom Keene. Kailey Leinz in for John Farrell. Many have asked, where is John? He's finishing up a manuscript on meditation. It's really pretty cool as well. I don't think so. It's more text-based and not as much photo. There is photos in there.
Tom, I want to pick up on Lisa's point on the dollar, though, because one of the big themes for me has been the route we've seen in
John's
commodities.
book, and you're talking the dollar? Continue.
Bring it back to the markets,
Thank
Tom.
you.
Bringing it back to the markets. What we've seen in oil this week is actually pretty remarkable. Right now, oil is on pace for its worst week since April of 2020. And in part, that probably is a stronger dollar story. But part of that also, I think, is concerns around the growth story out of China, what growth is going to look like globally with the Delta variant. And then how does all that growth concern come back to the dollar, Tom?
I've
Maybe it's all one
mentioned this
big circle.
before. Ed Morse and a few others really talking about supply coming on here at some point. It has been painful for the oil bulls. Right now, and we do this every once in a while, we get a research note, which we're like, we really don't want to do this, but it's so smart. We're like, we'll dial 1-800-ERIC Nelson and get him on the phone. With Wells Fargo Securities, he's a macro strategist and, of course, on foreign exchange as well. Eric, congratulations on a note that stopped me in my tracks. And the answer is you look for weak Chinese renminbi, but you're heated in the bottom of your note. It's not a devaluation, but simply weaker renminbi. Parse that distinction between depreciation and devaluation.
Well, Tom, when we talk about the D word, devaluation, not depreciation, everyone seems to think back to the August 2015 episode. That was a 6% move in the Chinese renminbi in 2 days. That's big for a currency that really doesn't move. And this was a very clear effort from Chinese authorities to hold the currency steady, and then let the thing go. You look at what we're sort of experiencing now, it's more of a situation where China's authorities are definitely holding the currency stronger than it should be, but we're not expecting them to suddenly let this currency fall 2 or 3% in a single day, the same way they did in 2015. It'll be a more gradual move, but it'll still happen in a relatively short space of time, probably a few weeks.
If it is fixed, not, but maybe it is a managed currency, do they have the firepower? Do they have the ammo? Do they have the tools necessary to make for a gradual depreciation?
Absolutely, Tom. We've seen a huge increase just the past few months, and really since COVID began, in inflows into China. And particularly look at the FX reserves of the Chinese central bank. They have increased meaningfully over the past few months. So there's a lot of dollars that China can draw on to manage this sort of depreciation, not devaluation in the Chinese currency, and make it a gradual move.
Eric, we're talking about the Chinese currency. The other side of this pair is the dollar and the incredible strength that we've seen over the past few weeks. And I'm wondering whether we've seen a shift in the consensus around the dollar, that basically is the consensus now that the dollar will continue to strengthen from here?
I would say it is definitely not the consensus, Lisa. I would think there's definitely probably maybe a 75-25 consensus that the dollar will weaken over the next 3, 6, 12 months. Now, at the beginning of the year, that was probably 90-10 or maybe even higher, to your point earlier. So this consensus is shifting a little bit, and so is positioning. We have seen a lot of those dollar shorts pulled out of the market, but on net, the market is still short the dollar. So there needs to be more position squaring, and really the pain trade is still dollar higher, not dollar lower.
All right, so what does that mean, Eric, in terms of how much support there could be to the dollar going higher, given the fact that people are not heavily positioned long and at a time when we have more concerns about global growth with the resurgence of the Delta variant?
Well, yeah, thinking about the technicals, we could see, especially if we see the Chinese currency move lower 2-3%, could easily see a new high in the dollar index. And to me, though, you have also something to counterbalance that, which is, will the Fed actually enact an early taper, and will the Fed, sort of following on from that, hike rates before markets are currently pricing that in? And that's where we're a little bit skeptical. So as we get into Q4 and we see the Fed continue to be patient on taper timing, we do think that dollar strength will start to fade a little bit.
But with the dollar strength we have now in that Fed equation, and as well the equation from China, what does the picture look like to you for broader emerging market currencies as a basket?
Well, in the short term, Kailey, it's a negative situation. You look at high frequency equity debt inflows into emerging markets, they remain very much flat. And the vaccine and growth situation in emerging markets remains tenuous. Plus, you got the Delta variant, which is really weighing on things. But as we get into maybe not so much the end of this year, but the beginning and middle of next year, if we can really put the pandemic behind us, get vaccinations where they need to be in the rest of the world, you're talking about a very strong global growth backdrop, a lot of pent-up savings, still very accommodative policy, and underinvestment in emerging markets for the past 5 years. So to me, the longer-term backdrop for emerging markets is very positive.
And a lot of the emerging market central banks already are tightening. They are already doing that. Well, we're just talking about kind of the anticipation of it when it comes to the bigger central banks. So how does that work into your thesis?
Well, unfortunately for some of these central banks and really for their currencies, what's really driving the market now is Delta variant, growth concerns, and the broader dollar trends. Look at Brazil as a prime example. Very hawkish central bank. The currency is not really gaining much. Mexican peso as well, a little more sort of back and forth from the central bank there, but you're not seeing strong peso gains because the dollar is well bid. So it needs to be a situation where we get past the worst of this pandemic, policy remains accommodative, and the dollar starts to fade before these emerging currencies start to recover.
What is the level of breakout here? What is the symbol on Bloomberg Dollar Index or on DXY, or frankly, to look at a single pair on Euro where you say dollar breakout to new strength?
Well, probably to me, it's 94.50 on
94.50, yeah.
Yeah, I think, and you need to see a decisive close above that.
On Euro?
That to me is a signal. On Euro, probably 116, below 116.
A 115
115
print
would be very decisive.
Yeah, 115 print. Yeah, I agree with that. I mean, it's really, really interesting right now. Lisa, pick it up, please.
Well, I'm just wondering if we can go real broad, Eric. And I'm wondering what the foreign exchange implication is to some of the supply chain disruptions, given how important trade is, if anything, given the fact that the U.S. has typically been importing so much and exporting so many dollars. What happens if that dynamic starts to shift and some of the supply chains get rejiggered in any kind of meaningful way?
Well, Lisa, one of the most important interplays for the FX market and global trade is that so much of global trade is invoiced in U.S. dollars. So if you think about when the dollar starts to get really strong, that tends to be very negative for global growth and global trade in particular, because exports and trade in general just is more expensive. Plus, in thinking about the dollar lending that needs to take place to facilitate global trade, that too becomes more expensive. So really, the dollar higher is not just a pain trade for the market; it's a pain trade for the global economy as well. So there's some real reasons to keep an eye on the dollar here as we test these new highs.
Eric Nielsen, thank you so much. Eric Nelson, thank you so much. Greatly appreciate it with Wells Fargo on currency. A really, really sharp note, a narrow note, folks, but really, really interesting. And it goes, Lisa, to the soup of China. I mean, to me, it's Leland Miller and China Beige Book simply saying, look, it's not happening.
Well, Gabriela Santos nailed it. I mean, the noise is so loud right now in China.
Oh, I thought you meant her blue look.
Yeah, exactly. Are you going to work on your blue look tonight?
Yeah.
Please send pictures. But honestly, she's looking at the noise from slowing growth, from the regulatory pressure, from trade, from the COVID pandemic. I mean, trying to sort of reconcile all of these aspects. I mean, yes, the currency is managed. It has not been an indication of any of this noise. However, when you talk about the supply chain, when you talk about the implications and ramifications coming out of China, there could be some really serious issues.
And Lisa, Kailey, what's interesting to me is it's I get confused over the color look as well. Kailey, to me, it's that what we haven't talked about this week is emerging market. It's drifted away.
Yeah, it has. I mean, I always pay attention when I see a stronger dollar, Tom, to what emerging market currencies are doing. And the Chinese yuan, to some extent, isn't immune from it. But it was interesting. I believe it was yesterday or Wednesday, we saw the yuan reach its strongest level against a basket of 24 of its peers, tracked by Bloomberg, in 5 years, going all the way back to 2016, even as it was weaker against the dollar.
Can I just say, Tom, you say to Kailey, have you been watching emerging markets? No one cares. She's like, I watch. I look at everything. We're going to be talking about the implications of a stronger dollar, as well as yields being as low as they are coming up on the open. One of John Farrow's properties that I'm taking over while he is writing a book on meditation. Priya Misra is going to be joining us ahead of next week's Jackson Hole meeting. Really curious to see of TD Securities what she sees in terms of the reaction in rates to an announcement of a potential taper.
Yeah, and I made a mistake. A surveillance correction, please, folks. I mentioned that John was looking at mantra meditation for this manuscript he's working on, and I'm wrong. Lisa, it's mindfulness meditation.
Okay, mindfulness. He is the person that I would choose for a full internal peace, and hopefully he can share all of his wisdom.
And bonus, I think it's going to be on Kindle as well, which is really cool. I mean, it's important to have that to get away from
it's going to be released
hardcover and get a more fixed distribution. It's the real meditation with John Farrow. You can see that coming up. Coming up, extremely important conversation on Afghanistan and Eurasia. George Friedman, Geopolitical Futures founder and chairman. Futures at -9, Dow Futures at -98. This is Bloomberg. Good morning.
With the First Word News, I'm Laura Wright. The biggest tax hike on wealthy Americans since 1993 is bogged down in Congress. The tax rating committees in the House and Senate are almost certain to miss their September 15th deadline for coming up with details. The problem is that lawmakers don't know how big President Biden's spending package will be. Plus, lawmakers have different ideas about which tax measures to enact. A defeat in court for the Biden administration on immigration. A federal appeals court has told the government to reinstate the Trump-era policy requiring asylum seekers at the southern border to wait in Mexico while their cases are being processed. The Biden administration had allowed asylum seekers to wait in the U.S. The case is likely to end up at the Supreme Court. A shakeup in the baseball card business has led to the collapse of a merger. Mudrick Capital says the merger deal with Topps has been called off by mutual consent. That comes a day after Major League Baseball and the Players Union agreed to an exclusive trading card deal with sports apparel and collectible retailer Fanatics that will end the long-time dominance of Topps in baseball. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
If you ask me what is the strategic priority for the Taliban, I would say consolidation of their power. Consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban.
One of our moments this week on Afghanistan with the wonderful Fawaz Gerges of the London School of Economics. He is an expert on terror. That was a chilling conversation. It's been an extraordinary week. I really want to say thank you to all of the Bloomberg surveillance team for starting strong with Thomas Barfield of Boston University. And I end my Friday here with George Friedman, Geopolitical Futures founder and chairman, with me, Kailey Leinz, as well. Lisa Abramowicz preparing for the 9 o'clock hour. George, thank you so much for being with us. There is that sentence in your essay, which in the last century, we were at war 17% of the time. What went wrong?
Well, we started to go to war 21% of the time. We were hit, remember, by Al-Qaeda. We went into Afghanistan on a raid to capture Al-Qaeda. We failed in that. They escaped at Tora Bora. And then we were in Afghanistan and we didn't know what to do. So we did what we do know how to do. We sent troops in and tried to create a different country. Afghanistan is Afghanistan. It has been that way for a very long time. Many have tried to change it. And in the end, we spent a generation there, 20 years. We'd gotten nowhere in terms of pacifying the country, and it was time to leave. And when you leave a war, as in Vietnam, it looks ugly.
Right.
It was more ugly the most, but it looked ugly.
George Friedman, I thought of you about 4 or 5 days ago of my 1956, when I could barely remember, in the Hungarian Revolution. You've literally lived get out of Dodge, get out of a country as well. How do you see the United States assisting Afghans who Admiral Stavridis say the Taliban won out of Afghanistan? How do we get them out smoother and faster?
I don't know. There are probably hundreds of thousands who'd like to leave. We don't have the aircraft to move them out. And remember, Taliban is the most powerful force in the country. They won the war. They will impose the kind of rules that we want to have. We may negotiate with them, but at this point, we've reached the situation where we are not in control of Afghanistan. We don't get the option to make decisions.
Right. You mentioned complexity. Are we having complexity, policy complexity, tactical complexity, because we don't have a theory, we don't have a view, we don't have a strategy?
The fundamental interest in the United States is to make sure that North America is secure. Our number one interest is easy. Keep Canada and Mexico happy. Don't ally with anyone else. Number two is control the oceans. We control the Atlantic and control the Pacific. We're secure. We can get involved in Eurasia once in a while very, very carefully. But these all-in wars, like Vietnam, like Afghanistan, places us always at a disadvantage. The native population doesn't like us. They want us out. And they're going to beat us because they're not going anywhere. We're coming in, and we're never going to have enough force to take on a country like Afghanistan. So we're frivolously involving ourselves in things that look good. We delude ourselves that our enormous power, and it is enormous, is infinite. And then it's always easier to stay another year than to leave. The longer you stay, the uglier it gets.
Well, obviously, the United States has power. It's a matter of how it is used. Are we no longer going to see the U.S. as a global hegemon and as this police country of the world?
A global hegemon is very careful in how it uses power. It doesn't fritter it away on secondary issues. Afghanistan was never a strategic issue for the United States once Osama bin Laden left. It was a country that the Russians were defeated in, the British were defeated in. It was a very difficult country. So we have to make sure that our cost-benefit analysis is correct. There is a price in going to war. We don't just wave a wand. And we saw that in Vietnam. And we didn't learn. We did it again. And now after 20 years, there are people who are saying we should have stayed longer. We were not going to win.
Right.
How long would we stay?
George, you are expert in our machinery as well. Have we finally figured out that technology doesn't win in Vietnam, in Cambodia, that technology doesn't win in Kabul or up north on the border with Uzbekistan?
It could win if you're prepared to inflict horrible casualties on the enemy, extraordinary casualties. Technology is a wonderful weapon for killing, but it's indiscriminate. The United States was not prepared properly to engage in indiscriminate war against the Taliban. And the problem wasn't lack of technology. It was we fought a war that we didn't have to win, and therefore we pulled our punches. Unlike Germany or Japan, where we did everything we needed to win, we probably didn't do that in Afghanistan, but then we shouldn't be there.
George Friedman, thank you so much. I look forward to speaking to you again. George Friedman, Geopolitical Futures founder and chairman. Kailey, it's been just an extraordinary week of conversations on Afghanistan. What is your observation into the weekend?
Well, it's going to continue to be a story of the international response to this, Tom, because usually when we talk about conflict, it is the U.S. versus its adversaries. But in this particular instance, with how badly this withdrawal from Afghanistan has gotten, it has become one of the U.S. versus its allies. And the fragility now of the NATO alliance with countries in Europe saying that the Biden administration handled this so poorly, it should have been done differently. It raises a question of what we do with our friends, not what we do with our foes, Tom.
And that's where James Stavridis went as well yesterday, of course, the former Supreme Commander of NATO, folks, that this is not so much about projection to the Middle East or projection even to what remains of Afghanistan, but it's projection to whatever was invented off the shores of Newfoundland in 1940, whatever, that NATO's future here will really be tested as well. Let me look at the markets here, and they are constructive. We have much better markets than we had 2 hours ago. Green on the screen, NASDAQ 100 actually positive fractionally. Standard & Poor's -6. For John Farrell, I'm not going to quote the Dow now. It's a sensitive moment in that we miss John. I think he'll be back Monday. I can't remember as well. The VIX 22.12. Stay with us on Bloomberg Radio and Bloomberg Television.
I'm Jamie Maggio with an exclusive Western and Southern Open update for Bloomberg TV and radio from Tennis Channel. There was a major upset in the women's draw on day 4 in Cincinnati. 4-time major champion Naomi Osaka was sent packing by Jill Teichmann in 3 tough sets. The Swiss hasn't won back-to-back matches on the WTA Tour since February, but she took advantage of 41 unforced errors from the former #1 in the biggest win of her career.
Literally, I'm shaking right now. I'm very, very happy with this win. And, you know, I've had a very tough year. I started very well, and I had many, many injuries. But I felt like a good level. So, yeah, I'm just really, really happy that it's working out now.
And don't forget, you can watch all the action from Cincy exclusively live on Tennis Channel. I'm Jamie Maggio.